Oh,
how's it going, guys?
Yeah, great. Richard, nice to see you finally, man. I was hoping they'd put us together in the session, and here we are. So,
I was surprised. They only told me a little bit earlier. It's like, cool. Fellow countrymen.
Yeah, Igor, always great to see you, man.
There you go.
Excellent. Yeah. Great to see you too.
Yeah, awesome. Well, welcome to everybody to the first session, the opening bell. I'm just going to share my screen if you guys don't mind.
Yes.
And just going to start with the NASDAQ. Well, that's what I'm going to cover, the NASDAQ. Okay, so I'm going to start with the daily time frame. I have this top-down approach. So I start with the daily time frame and then just talk about what I see. We already talked about the significant 200 EMA that's been broken a few days ago now. And you can also see this little indicator on here. That's just a support and resistance indicator. So we broke that support. And then immediately below that support, we had the 200 EMA and it just crashed through that as well. And then we had a couple of days just ranging to the side. And yesterday and the day before, we had a bit of a pullback. And today, the pre-market has definitely been trading lower. But my bias is still short, even though in the short term, I'm well aware of the fact that this can pull back to the 200 EMA, maybe even this resistance area, the previous support. So it could be a retest, but as of today, I'm a little bit unclear, and I think everybody's waiting for tomorrow when the FOMC announcement comes out, and hopefully we can get a bit of clarity. Just a note on the FOMC. On FOMC days, it's typically not a good idea to trade, but the day after FOMC, I don't know if you guys will agree. That's when the market tends to find directions, usually the day after FOMC.
Yeah. So I agree. I tend to stay out of those high impact news events completely. Like watching how the market reacts, but don't trade it.
Yeah, don't trade it. Yeah, I like to see the fireworks, but definitely not involved. Now, yesterday we had a very interesting open. We had this was a news event, this candle here. And then this was the open. So a very strong push to the upside, but then it hit this. I've got the pivot points. It's a very standard indicator. It's free. You can download it online. But this is so at the open, we were really strong push to the upside, and it hit against that resistance 1 level, and it just failed to break through from there. And then we just had this ugly range. And in the third session, it started to move to the upside. And right back to the open candles high. So the first 15 minutes, basically. The first 15 minutes is, I don't like to trade the first 15 minutes anyway. But anyway, so we were trading right back there. Now, it did break out here, and I did not feel comfortable taking a long position there because, first of all, I do have a short bias. And that doesn't mean I'll take a long position, but then it needs to be, a very clear pullback or something of that sort. I don't want to go long at a breakout level, especially when prices move that far. If you just look at that bullish count, there was a number of bullish candles right up to the point of the session high. So I was in the session, I was just saying, like, if it can just pull back a little bit and retest that level and then break out, then that would make for a much better entry. But it didn't stop. It just continued to the upside. So that is the breakout. If it doesn't pull back and give you a decent entry, then you've missed the trade. And then obviously we had that pullback. Now, this pullback is not what you're waiting for. This is way too far away from the breakout area. You have missed that opportunity.
Yeah.
So that's the reason why I stayed away from this particular breakout during the third session. Now, if you look at where we're standing right now, you can see on the 15-minute, well, first of all, for people who haven't seen my setup yet, I have the 1 minute time frame here. That's my trigger time frame. So that's where I make my final decision. And then to the left of that, I've got my 15-minute time frame. And then below that, that's the half an hour. And then to the right of that, I've got the 1 hour time frame. So it's just those 4 time frames I'm looking at. And if you look at the 15-minute time frame, what you can see here is that price is definitely making lower highs. This is pre-market, so the market open can completely distort this picture completely. But we do have this breakout out of the support level on the 15-minute, and we also have it on the half an hour. The 1 hour is a little bit in no man's land, but if we can, it just depends on the open. If this can break lower, then S1 would be a really good support level. This line you can see here, that's yesterday's low. Okay, so I like to just plot yesterday's high and yesterday's low on my chart because they do also serve as support resistance areas. Okay, they can find support there and just bounce back. And if it is going to break through, then you don't want to take the breakout. You want to wait for it to give you some sort of pullback, because that pullback before it continues, that little retest, it just makes it so much easier to determine exactly where to place your stop loss, right at that pullback. Instead of, say for example over here, this candle here, when it just pushes right straight up, it's much more difficult. I suppose on the 1 minute time frame you can determine where to place your stop loss, but just the price action itself, if it's that far extended, it's just not. I mean, in my opinion, you've already missed the move.
Yes,
you've already missed the move. Yeah, and if you look at last week we had also price action that looked very similar to that, but we had very big wild swings. So it can come right up to the resistance area and then you just get a swing right back down.
Yeah.
So, it's all about stacking probabilities. And in this particular case, I didn't feel, I just found it very difficult to stack the probabilities in my favor to say, yeah, there's definitely a higher chance for this to go in one direction compared to the other, if that makes any sense. So yeah, the market opens only in 8 minutes from now, but this is a very, very good example. See the breakout, and now you get a retest. But on the 1 minute time frame, you see on the 1 minute time frame, when I time my entries, I use VWAP. VWAP it's a dynamic support and resistance. It's dynamic support and resistance levels. You get two different types of support and resistance. You get your static levels, and then you get your dynamic levels. Your static levels is based on price action itself. You can physically draw a horizontal line and identify those levels. And then your dynamic levels moves with price. So that would be your EMAs, your VWAP levels, and traders typically use VWAP and the standard deviations of them. So this is your VWAP line over here. This dotted line is the one standard deviation. I just made it a dotted line so it can stand out. You can see it looks a bit busy with the support resistance, make this chart look really busy, but it's just the support and resistance line. So that's the one standard deviation, and then this is the two standard deviation, and then the one below that is the 2.2. And that one doesn't serve real purpose, to be honest. That's more just for I'd like to see that little band. I just like to see a band like this is the 2 and the 2.2, but it's not really a significant level. The 2 standard deviation, that's typically the significant
level. Are your VWAPs based on the current day's prices, or does it actually roll over?
No, I'll show you but to answer your question, yes, it is. You see, 1 day.
I see. Okay.
Yeah, so I just base it on that. So it basically starts to calculate it actually from pre-market.
Yeah.
But so it includes the whole day. So from the Asian session, basically all the way to now. I think I haven't really tried VWAP settings, in terms of when it starts to calculate from the open, because that's going to be a bit messy because everything's going to be so tight. You need price action, so it's going to take some time for everything to, for you to get the average. Yeah, because it works very similar to a moving average. It's just got volume calculated into the equation. So,
gotcha.
But yeah. Anyway, that's what I'm looking at. I am short, as I said. My bias is definitely short, but I do need to see. It has to make sense. Obviously, the setup has to make sense. And then from today, what I usually did, like in the other sessions and even the videos I recorded of the trades I took, is I'll do the analysis on here, and then I'll execute the trade on a different platform that people can't see. So I've just set it up now so I can actually execute the trades right on here. So people can just see the levels and so on. That's if I get a setup. But please don't try to follow my trades, because I do have losing trades, believe it or not. Even
we
after
all do.
20. So, but rather focus on the process. Rather focus on the process, and you're not going to agree with everything I say, and that's fine. That's normal. But I think it's about like Richard and Igor. It's really about when you learn how to trade, you're going to pick up little bits and pieces from different coaches, and it's going to resonate with you, and you're going to like that particular part, and you want to make that part of your trading. You don't have to trade exactly the way we trade. It's gonna like Paul said, you have to make it your own. So. Okay, that's the NASDAQ. So we'll look at the open, but for now, that's how I look
5 minutes
at it.
away, right?
Yeah. 4 minutes. So quickly. Sorry, Richard.
No worries. Igor, do you want to jump in your charts or?
Yes, no problem. Just to make continuation of Jannie. So you're absolutely true, because you guys, you changed me, because I started to use volume profiles more than I used to. So I just want to show something. So yesterday I had a beautiful session with Paul and Michael, and we talk about British pound dollar. Right now on the chart, you can see British pound dollar futures. I put the futures because I want to show the volume profiles here. I use on TradingView indicator algo alpha activity and volume net order flow. It's a decent indicator. What we talking about? What we talked yesterday about British pound dollar, and I told that my bullish bearish validation point is 1.2950. So we talk about that, and they use different strategies and use low volume gaps, for example, to find a zone for the price rejection. For example, right now on this chart, you can see here a volume of 12K, and there you have a 5K volume. Just we can see the gap there, and you can see how price reacted there. It was insane, and my strategy was completely different. But I like when I see where the other traders using completely different strategies and come with the same exact price levels that I use. So I had a pending order today, and I made a buy order at 1.2950. Now I will back just on my charts. This is just I would just change the screen. Just a moment. I will just to show what I'm looking for, just to see. Do you see right now? Yes. So this is the British pound dollar, and there is one thing, but what I really like to see when we have important price news. This is the pattern that repeats itself very, very often for euro dollar and British pound dollar. Actually, when we have very important news, usually we tomorrow have a farm's decision, for example, there is a 40 level relative strength index, and price very often create, if I want to create a trend line, I will draw a horizontal line around the 40 relative strength index level. In the past, I had experienced that very often price oscillate here, jump and start to go bullish. I know that this is the pure experience that I have. So I have a pending order on the level 1.2950. It's my really bullish bearish invalidation point from the yesterday. That pending order was touched just the last hour. And what's happened, we have price rejection here. And we, as you can see, we are 20 pips right now from the entry position. So I have a plan. My plan is that this trade can be intraday trade or maybe swing trade. So we will see what will happen. First, what I want to see today is the price to go to 1.301 or 312 level. If that happens, I will keep my trade because I want to see much more from that. And I will tell you why I'm thinking that. first, based on fundamentals, we can have two basic possibilities, in my opinion, tomorrow. We will have some pessimistic tone about U.S. economy. I know that, because all that stats and all that news and everything will be around that. But they will either keep the rates 4.5% as economic calendar shows right now, or what can happen by accident, we can see now interest rate cut. If that happens, I'm sure that price will go huge swing move, maybe up to 1.312. So in that case, I think that I don't have something to lose there. So what I want to see is the bullish push today with the new high. However, if today I see there's no new high, for example, price just the maximum high price is 1.3 level, maybe I will close my trade and I will not trade up to we see the farm's decision tomorrow. So this is my plan, and I just want to ask you, what do you think about my plan?
It's a great plan, Igor. Your plans are always great. You know, they always work.
We're not going to tell you it's not a good plan.
Well, I think you just need to be mindful of it's already like the market opened and just pushed lower. I don't know if you saw that. The first minute was a very strong push to the low end. But anyway, yeah, I mean, to me personally, it's not the best looking chart. It's a but I would definitely wait for, especially if you're trading longer time frames, I would just wait for FOMC, to be honest. Yes. I would wait for that to play out, because that's definitely that could paint a completely different picture. So maybe you wait for that to get out of the way, because you do focus on longer time frames, like that's a half an hour.
Right now I'm watching 30-minute chart, and based on this chart, my stop loss is 1.292, and 1.3 can be first target. So we can call this as an intraday trade, nothing special. When I will look right now, it's look a little bit bearish when we look a little bit the chart right now. But my previous experience, I know that I feel that like this is the fake breakout, but this is just a hunch. This is just some experience that I have from the past. So you're absolutely right. We need to see what will happen. But right now, I want just to exploit this 40 level on a relative sentiments on a 30-minute chart, just to see will it hold.
Yeah. What does the daily time frame look like, if you don't mind? If you can just quickly go.
Okay, I will just make like this. As you can see, yesterday was a bullish day. Today we have some kind of the bearish attempt, but of course this candle is not finished. So
yeah, of course. Yeah.
So this is nothing right now, and a lot of times we can see the false breakout and then upside. So I think that this today correction from the 1.30 level, 50 pips correction is really decent correction. So I think that it's a decent pullback for the daily time frame. So there is the room for a push right now. But
guys, well, no, I have to sit on my hands. I have to sit on my hands. But let me. Do you mind if I just?
What's your planning on the NASDAQ there? You think it's going to bounce or continue lower?
No, I mean it already had a little bounce, and I'll show you, because I don't trade the first 15 minutes. But sometimes it kind of you do miss opportunities, and that's why I went. And it's got nothing to do with the bits of coffee with no sugar. That's even worse. Horrible. No, like you got this push, and this is what I said about you. You can see the breakout on the 15-minute. You can see the breakout on the half an hour. This is the open, and then you get a retest of that support level, which is now a resistance. Do you see that? Yeah, that's the reason for the and now we are at where I wanted to take profit. So
that on a 1 minute. You see, I do a similar thing on NASDAQ and on the S&P. So normally I'll wait for like either liquidity run, so like a continuation. So it took out the overnight session, the ES it did at least. The session lows, there were a bit of a cluster. And then you get sort of a breakout retest sort of thing. And you see there was a nice big fair value gap there as well on the 1 minute.
Yes, I see
price just filled and boom. So
okay, so
on that.
No, this is too late. But I mean, I mean, this is within the first 5 or 6 months. This is actually after 1, 2, 3, 4 minutes after the open. And man, you see now on the 1 hour, you do get, you can see the support level will be, it looks like it's going to break through this as well. But the thing is, like, even when you see all these confirmations on the longer time frames, in this case, the 15-minute, half an hour, and the 1 hour, your entry has to make sense on the 1 hour. There has to be a reason why you enter on the 1 hour. You don't just see, oh, it's breaking out, now I'm going to enter. The reason why you enter on the 1 minute, oh man, I hope there's someone watching you got into this trade. But yeah, so now like what needs to happen now is like there needs to be a good reason to enter the trade.
Yeah.
In other words, very similar to what you just see here. Okay, in this case, it was bouncing off a static support resistance level. Okay, support that becomes resistance, obviously, because it broke through, or it can be a static level.
It's dropping harder.
Yeah. So yeah, even when you write on your bias, you can still miss out on the opportunity. Okay, well, that's fine.
Often.
We'll see what happens. Yeah, but this is a very strong push. So we'll see, like with this strong push on the 1 hour, hopefully we'll get some. Hopefully this is going to quiet down some, but and retest this breakout level, and then we get an opportunity. Yeah, but I don't think now is definitely not a good time to enter a trade. Don't ever try to chase these short or these, once it starts falling.
Yeah.
But anyway.
Maybe can I just quickly show my
Yes,
chart?
Of course.
Right, so pulling up there. But so now Igor already knows what I do. James, I don't know if you know what I look at, but pretty much looking for either liquidity sweeps or runs.
Okay.
So liquidity sweeps basically is price taking out either overnight session high on lows. This little zone that we have here on the SPX I'm looking at currently with Hola Prime.
Okay.
And some sort of a run, and then followed by a immediate reversal. So sort of like a stop loss run situation, if you want to call it that. Generally, just look at a 5 minute, and then I also have a 1 minute like you, where I execute on.
Okay.
Generally, there once I do think I'm dealing with a reversal, I'll switch to a 1 minute time frame, and you see these vertical lines I got here. I only take trades using this strategy between 9 a.m. and 11 a.m. that time window. So the morning session, pretty much. Right. So you want to see a reversal after a key break of a level. It could be overnight session high or lows, or previous days key levels, right? But that's just part of the first sort of steps that I look at. On the 1 minute, I then want to see price. In this case, we had a bit of a bounce there. You can see just after the 9 a.m. marker. But I wanted to see price take out a previous structure point. Where's my little...
There's a lot of them.
There we go.
There we go.
So, low lows, low highs for those guys that obviously follow what's happening here. I want to see that after that little bounce here, the most obvious previous, in this case, the lower high, was right over there. So on a 1 minute, if price would have continued and taken out that lower high, then, that's just another potential indication that price is actually reversing, right? And then I want to see fair value gaps, generally or hopefully as close as possible to the actual, what you hope is a reversal point, and then use that as your trade location to go and place, I just use limit orders. So I want to see a retest of that area, get into a trade, obviously control my risk properly, and then, get into a trade. So that's the sweep scenario. If we have to look at
man, sorry to interrupt you. There's
No worries.
the NASDAQ, there's nothing standing in the way of, we are now right at
melting.
yesterday's low. Sorry about that. I just
no.
some interruptive side commentary.
So what I'm doing here on the 5-minute, because price is actually like this, I would consider a liquidity run type of setup. So similar to what you were doing, I can't remember that level of yours that you would like to. You're not going to chase it. You want to see a retest.
Oh yes, yeah. Sorry, just a support resistance, basically.
Yeah. This guy's. We're potentially going to sit here with a pretty large fair value gap on the 5-minute. Let me just get my other tool out here. Not that one. Bear with me. Still learning this a little bit. Anyway. This candle's still forming, so we could potentially, after the close, have a fair value gap there. But this is way low down for me to try to take an entry there. Because fair value gaps typically get, tested and might act as support and resistance. But if you look really closely, a lot of people won't consider this a fair value gap between that green candle, red, and this one over here. But I look at things a little bit more loosely. Not as
nothing.
People might say, you have to, fair value gap has to look like this or has to look like that. For me, that is a fair value gap there between this green candle, this red one, and this one over here. Previous support area, overnight session lows, might act as resistance if price were to retest that and then trade low. So I won't enter down here. I think we do get a retracement of that area. I might consider actually doing it. But I must also say, with this strong move down, I think, definitely the buy is short. So this might potentially be the right trade to take. But who knows? With tomorrow's numbers around the corner, it could just be a lot of volatility with no real direction. This looks like, boom, a strong move lower. But as we've all seen during recent days, or actually this year thus far, they can come to abrupt ends and immediately reverse the other side again. So opposite direction. So,
you're right. Well, I mean, and also like when you miss that, or what if you look at the size of that drop? Now, if you do get a pullback all the way there, that would be the ideal spot because it will limit your risk and all the rest of it. But at the same time, you almost don't want it to pull back that far, because the picture will look slightly different. But on the 15-minute on the NASDAQ now, there's about a minute and a half left. Definitely a very strong open. We'll be getting a pullback now. So I'm still waiting for opportunity to short, but exactly the same as you, Richard. The 1 minute time frame now needs to make sense. I need to find an opportunity that sets up there. So like a breakout or something like that. So, and that seems to be, I hope that's not going to be a tough ask because it's really far away from everything.
Yeah. Oh, look at that again.
Oh, wow.
Yeah.
Oh, man.
So you might be dealing with one of those days where it's just going to go one direction, no pullbacks. Who knows? We'll see. I mean,
it's your fault, Igor. It's your fault. You were talking too much. I was looking at this.
I don't know. Igor, you want to switch to your charts? I mean, I'll monitor things here. If we do get a pullback, then I'll be happy to go into that zone. But after a drop like this, I'm not going to go chase it. That's definitely not something that I'm going to do.
Man, oh man. Yeah, that's a beautiful, beautiful drop. But anyway, sorry, Igor, you can take over.
Okay. Let me talk just my setups right now. I will just show a few of them, what I'm looking. Okay, so when we talk about euro dollar, it's exactly the same as for British pound dollar. My bullish bearish validation point is around 1.088. So below that point, I'm not bullish anymore on the intraday level. So just monitor what's happened here. But of course, I will not touch it. I already have the trade at British pound dollar. Almost it will be, it's a 4 pips above my entry point, but I'm just monitoring what's happened here. This is the strong push, pretty strong push for this time of the day. And I think that the NASDAQ and the British pound dollar and the US dollar, something happened in the market, a little bit higher volatility in all currency pairs like I see right now. Then what I want to talk is about my other setups. Aussie dollar, I have one trade almost 2 weeks. We had 2 very bullish days. Now we have some bearish attempt. Of course, I'm just monitor this trade. As you know, my target is pretty pretty great about 0.69.
High ambitions.
Very ambitious. Yes,
buy us all a beer with that target.
Very ambitious, but of course I will just wait to see. From the Friday, there is an interesting setup. I didn't enter in this setup because there's so many trades related to US dollar. I don't have a risk for all of them. But this on the longer term, it was a great trade because we broke relative strength index indicator trend line on the daily chart. We have very strong trend line, 1, 2, 3, 4, 5, 5 times 5 dots, and then we broke it. It was broken. Of course, we are still in the range, in the bearish range. In the channel, not range, in a bearish channel. So of course it's not smart maybe to enter, but like I said, traders sometimes need to enter into trade before something happened, because we can wait, and sometimes for the longer term trades, it can be smart to enter a little bit earlier if you have several triggers for that. Beside this trigger, the good trigger is that Japanese economy has a problem, but on the other side, US economy is not in the great shape. So this currency pair is a fight of 2 weak currencies. So I can just describe like that. And the last setup that I just want to share with you is little bit something that I do not trade. I'm just watching, just like to think. And I will show what I'm thinking, in which direction. I'm watching that Canadian dollar had very good news today. CPA is much better than expected. And on the technically, we see that the simple moving average 50 and 200 and 1 hour chart are broken. And we see that this some bearish move. Maybe this can be the end of the bullish trend of British pound dollar CAD. I don't know, but it looks like that. So I think the Michael yesterday made a trade here. He made a bearish trade here and talked about his strategy. But I'm watching this just in longer term. This can be maybe interesting. So for traders that watch this session, just to maybe monitor this currency pair, maybe sometimes in the future can be interesting. For example, what I would like to see, maybe to see attempt to go to the simple moving average 50 one time more, and then to go down again or something like that. So I would like to sell maybe this, but on the higher price. But like I said, this is the really interesting move for British pound dollar CAD. Plus, we have fundamentals that suggest that price can go down because the excellent inflation data CPA for Canadian dollar. So this is things that I monitor on my charts. And I just, of course, like I said, when I trade US dollar, I need really to concentrate to pick one currency pair, because all of them are correlated, and it could be very risky to open multiple trades. And there's no sense. There's no sense to open multiple trades. So I just want to monitor, and we will see. I just want to see next 10 minutes what will happen here. Maybe this is a false breakout, and maybe we can go up here. But this is my wishes.
Yeah, just to get back to the dollar yen, you showed the dollar yen. You are, and I agree with everything you said, because you are contradicting the dollar yen and the pound dollar, because you long on both of them. You long on the dollar yen and you short on the dollar on the other one. You long pound US dollar, but you short dollar yen.
Yes.
Sorry, you long dollar yen and you also long pound dollar. Let me just get that right. So
yes, it's good for hedging, maybe. Yes, but like I said, I for example, I have a problem with US dollar Japanese yen if I trade on 30-minute chart time frame, because behavior is completely different than when we trade euro dollar and British pound dollar. So maybe people that trade Japanese yen pairs, maybe they use Ishimoku clouds or some other strategies that are much better or something like that. So I don't have a good performance there. However, when I trade a longer time frame as a swing trades, channel breakouts, for example, like this or something like that, I have more success here. But actually, I should make trade at Friday when we broke a relative strength index. Now we have 2 bullish days. I think that it's not good price level to enter right now into the trade. Okay. So I will not do that. But when I look chart like this, I have a feeling that this can go higher much and break this. I think that we can really push higher here, but I need something, maybe some additional trigger fundamentally, and to break this level at 150. We will see what will happen there. So
do you look like do you use other time frames as well? Maybe the 1 hour and the 4 hour, and see if you can, because some, as you know, you sometimes you can see patterns within patterns on smaller time frames.
Yes, I'm watching all the time. So here, as you can see, it's very similar story. On the relative strength index trend line, we're really bullish on 4-hour time frame, on 1 hour time frame, either on the 30-minute time frame. But like I said, this pair is a little tricky for me on the lower time frames. I have always better picture here if I use daily or weekly chart. I don't know why, but just a previous bad experience. So, I think it's like that. So it really looks good when we watch a completely picture. I just want to watch this as a naked chart, for example, and if I watch like that, this can be interesting, but I don't know. This channel here is my worry, because we didn't break it yet. So only that is the problem right now.
So are you waiting for perhaps like a breakout out of the channel and then maybe a retest up to that support level?
Yes, it'll be beautiful. Like we trade stocks, for example, just a breakout of the channel, then retest, touch this trend line again, and push higher again. So it would be beautiful.
So but would you wait for that confirmation of pullback and then wait for candle to then bounce from it, or you just enter?
I would like now, when I miss this breakout here.
Yeah.
Now I would like to see the breakout of this trend line here, retest, and then to enter into trade if I decide that in the future.
Cool.
Yeah, I'm just looking at the NASDAQ. I didn't hear a word Igor was saying. No, I'm joking. I listened to everything he said, Igor. but the NASDAQ is it's starting to consolidate a little bit. There's 5 more minutes left before the end of this hour, and usually, when a new hourly candle starts, you'll get a wick to both ends, most of the time anyway. So I'm just hoping something will present itself. But this is going to be like not the ideal move was right at the beginning, like 4 or 5 minutes after the open. Because it was just right at, sorry, Igor, it was just like right at the levels. It was just perfect, breaking out on the 15.5 now. It was just all lining up so beautifully. And I did not expect to move this size. I'll be honest with you. I just like point out the high or the lower highs and that sort of thing.
Yeah, generally things can get quite, sideways before a big news event as well, which now is doing completely opposite. Yeah.
Yes, it just crashed through. But anyway, sorry, Igor.
Jannie, can I just ask you about VWAP session and NASDAQ? How do you use that indicator when you trade, if you trade like that? Because you're talking a little bit about that. Just practically, do you have some edge using the VWAP session when you trade NASDAQ?
Look, it's very simple. There's no need to overcomplicate most things in trading. I just use the VWAP as support and resistance levels. They are dynamic support resistance levels. That's all they are.
So do you like to buy above the VWAP and sell below VWAP, or
no? I would like say for example, if I see again the bias has to come from the longer time frames, as you know, right? So the 15-minute, half an hour, and the 1 hour. So I get that bias, and then if my bias is short. And we are, so if I show you my screen quickly,
okay.
Where we are right now is not the best example, but I'm still going to explain to you how I would use it. So, okay, you can't see my screen yet. You can see, oh, there we go. Just look at that. Man, oh man. Anyway, so you're going to see, like, where are we trading now? We are trading at the 2 standard deviation VWAP. Okay, so that's a support level, as I said, a dynamic support level. Would I buy there? Definitely not. Okay, because my bias is short. It's only if my bias is short, then I would use the VWAP as a potential entry point, and I would use the 1 standard deviation, for example. I know it's very far, but that's how I would use it. Does that make sense?
Yes.
If my bias is long on the longer time frames and price pulls back to the 2 standard deviation VWAP, then that would be a point. That would be a point I would start to look for an entry. Does that make sense?
Yes.
So you don't pay attention to all the VWAP line. You don't pay attention to VWAP, 1 standard deviation, 2 standard deviation all the time. It depends on your bias. Okay, so in this case, you're not going to pay any attention to the standard deviation, the 2 standard deviation, because that's supposed to be support, but you're not interested in support right now. Not the dynamic support levels. Okay, maybe static levels, like for example S2. S2 is definitely, you can see on the 1 hour time frame, it just crashed through S1, and the hour is only closing in 2 minutes time. So look how far it's traveled in the first half an hour of the open. So S1 is being crashed through. Now S2 is the next support level. Okay, so that would be the next target, so to speak. But now for me to get an entry, if we can get a pullback all the way to the 1 standard deviation, that would be like, okay, this is a resistance area, and I would see how price behaves there. Does it reject from there? And I would use that as, that's a confirmation of that's the reason for my trade. Does that make sense?
Yes.
So you can't. So for someone who just trades the 1 minute time frame and you just want to buy off the 2 standard deviation, sell off the 2 standard deviation, or buy when it touches the 2 standard deviation, you're going to have a very, very difficult time, okay? Because you've got no bias. You don't know what's going on in the longer time frames. So once you have the bias, then that's going to determine how you use your VWAP. Does that make sense?
Yes.
Yeah.
Of course.
So even if my bias is short, and it hits the 2 standard deviation at the top, which is like way up there, it doesn't even want to let me go that far up. Okay, if I do that, okay, you can see how wide they are apart now. But if my bias is short on the longer time frames and it hits that 2 standard deviation, I know that's a resistance area, and then I just want to see price rejecting from there. And then my take profit will be again at a very obvious level. The 1 standard deviation would be an obvious level because I know that's a support level.
Yes.
Does that make sense? So
you use them as targets as well.
I use them as targets as well, yeah. Okay. Because like, oh shit, what have I done now?
You're pressing buttons there.
Yeah.
Pressing. You're chasing.
I'm chasing. Yeah, so that is how okay, the new hour just started, and you can see we're just immediately pushing down. Now, there's definitely a high probability that, I wonder if I can just zoom in on the 1 hour. So, this is a flat bottom, the flat bottom candle. So what the flat bottom candle is like when a new candle starts and it just immediately moves in one direction. Usually when that happens, the probability is very high for it to reverse and at least break the high of that candle before it continues lower, if it's going to continue lower. Okay. But yeah, for now, I would say, like, if I just zoom out a bit, you can see that this little arrow, again, is just to tell you, yes, you broke out of the support level. That's more useful when the price is very close to the level. And you zoom in, is like, did that close below or not? So the arrow just helps you to confirm, yes, it definitely did close below it. But in this case, you don't need it, right? Definitely. See, there we go.
Yes.
That's the 1 hour time frame. So that's what I mean. Like, when you get a flat bottom on the new hour and there's no wick, the probability is always high for it to first break it before it comes back lower again. But now, for an entry, I'm going to have to wait for a pullback. And the areas of interest now is yesterday's low, and the 1 standard deviation. Now, if these two can come together, then that just kind of, that increases the probability that not necessarily that it would become lower, but the point of entry, that's a really good point to go short. Or this could just drop lower and then not give you any entry, and that would suck, but that happens. That just happens. There's it's such a big
trading,
move,
right?
Not even one trade, not even one. Yeah, sometimes it can be very difficult to, like, if it just moves and it trends really hard, it can be tricky to get an entry point because it's just hugging this 2 standard deviation.
Yes.
It just keeps hugging it, and it doesn't give you a nice little pullback or anything of that sort. So this could potentially just move without me, and that would suck. I was really hoping to place a trade today, especially when I saw this is what I was pointing out, right? So you see that. Yeah. So it makes a high, it makes another high, and then it comes right back to this low before it made the second high. Okay, now you could that's how I read it. Other people will say, well, what you've got there is a triangle. The triangle. You can take this a bit further. You see what I mean?
Mm.
And then the breakout to the low end. But I don't look at the triangles. You just need to spot in this particular case, even if you miss the fact that it made a lower high, just the fact that it breaks out of the 15-minute and the half an hour, that's good enough. And you combine that with your bias, if you can get one on the longer time frame. That's how we started the session. Break out of the support, just a solid break out of the 200 EMA. And now you've got that.
Yep.
A little bit unclear, but just much more clearer on the smaller time frames. Anyway, Igor?
Yes.
A nice pullback will be great, but it doesn't look like that at the moment, right?
Yes, but when I watch this chart that you just show about that the price following the VWAP, what I like to see, I trade several years ago stocks, for example, and I know that a lot of stocks traders, they use VWAP, they wait that follows like this line right now, and then in one moment price starting to capitulating, to be very, very bearish, and after that there is a price rejection with a bullish candle, and they very often entering that in that moment. So it's very beautiful when price just follows the VWAP follows, and in one moment started to very fast to go down, reject, and start to go up. So like a V pattern. So it's really beautiful when market can gives us such a thing.
Yeah, but like just having said that, like, you know, these typical moves probably happens 2 or 3 times a month.
Yes.
Right. They don't. What you typically deal with
and fast
is this.
Yes.
You know, it's typically not straightforward to you know, to, like, if you look at this, was that the open? Yeah, this was the open. This was yesterday. No, it was the day before. 14th. Looks very similar to yesterday's open. So yesterday's open, the day before.
Friday, wasn't it?
Friday.
Yeah.
That was the day before yesterday in trading language.
Trading day before.
So yeah, you had a very similar, very strong open. It hits the resistance of the R1 of the pivot points, and then it pulled back right up to this is now a support level that was a resistance level. That's now support because it broke through. And it found support there and it bounced back up. Yesterday looked very similar. The open, again, very strong open, bounces against R1 and then pulls all the way back down and right to this breakout area before it bounced back up to the upside. So that is typically what you can expect. Like it's not always very clear unless you look at multiple timeframes. That's why it's so important to look at multiple timeframes to get like a, you know, just to try to stack probabilities in your favor. It's like, I think this is likely to happen. It's more probable for it to go long compared to go short. That's your job as a trader, just to like stack the probabilities. Yes. But like days like today, that's just beautiful. And if you don't get it, then that kind of sucks. But there we go. But anyway, I'm not sure who wants to take over here. Richard, do you have something to show?
Yeah, I want to still show crude oil as well, WTI.
Oh, yeah.
Do that quick. Should be popping up on the screen. There we go. So similar thing on crude oil, also like trading during that morning session. Although in the past I've actually traded during the Globex session as well. Some nice moves you can get there. But we had yesterday actually, as price left or past that time window of mine was the actual low, and we got the strong move back up again. So we already had today's high. What was this? Around about 6:10 a.m. Eastern before we start seeing this decline. Yeah. So unfortunately, I didn't get, you know, what would have been nice if price does a run again or a sweep. In this case, a sweep. If price actually entered into the time frame, broke that high, and then reverse. Right. So I'm very, how can I say, stubborn for what I look at or wait for. But in this case, it just moved straight down. Actually, right at the 9 a.m. mark, we had a very long-range candle there. You can't see it now. There we go. Boom, straight to the downside. That actually created a fair value gap. And while you guys are talking, this has already been tested twice, and now we had a nice little decline again. So not really a setup that I would have taken. One could argue this is potentially just a continuation type setup. See this quite often for especially breakout traders on lower time frames. You know, a lot of times, you know, I'm not a big fan of a breakout trade, so I won't have, for example, a sell order waiting at a previous level, because quite often, you know, they get run or ran, especially during the morning session, and you just see price move in the opposite direction. I will, though, however, say that if you do see a breakout with a fair value gap, then, you know, waiting for a retest of that fair value gap, that to me is a bit more of a, how can I say, high probability type of setup, which would have beautifully worked out here. Just not a trade I would have taken today. But yeah, that's what I'm seeing on crude oil.
I mean, just to add to that, sorry, Richard.
Yeah.
Just to add to that, like if you look at the point where it broke out of that support, it looks very similar to the NASDAQ chart we just looked at. If you look at the highs, it made a lower high, right, and then right back to the support level, and then it just broke out there. And if you look at the first high, so you get the highest high and then the lower high. The first high, just prior to that. Sorry, no. There were two. Go to your left. Well,
this one
more. So that's the second high. That's a lower high, and then if you go to your left to identify that's the first high. Now, if you look at the price action prior to that, that's a beautiful uptrend. Then there's a breakdown, and then it kind of tests. It wants to go higher, but it fails. It makes a lower high, and that's a really good,
I mean, there was, other elements here too. Like, as you probably know, but for all our viewers, higher highs, high lows, what define an uptrend, right? That first high you were talking about, price makes a move lower, breaks a price structure point, right? First potential indication that we might be seeing a reversal, potentially still a little bit early. And then we had that second high you're talking about with another failure, so like a trend continuation, now making lower lows, lower highs.
Yeah.
At a breakout point, after price structure break, with a fair value gap, retest fair value gap, acts as resistance in this scenario, and we've seen a strong decline lower. Actually been tested twice there. So
the second test will make you nervous.
Reading sort of perspective, I mean, all the elements were there, I always say potentially because you never know, right?
but again, you're right. But again, it's just all you have is you can just stack probabilities. That's it.
Yeah.
You can't once you enter the trade, it's out of your control. You don't know what's going to happen. You just don't know. But you can stack probabilities and you can have a process. And if you follow that
sequence of events, what is it telling you? And when it does this, generally it does this and this. Ask yourself, if this, then what? What could potentially follow?
Yeah.
And then enter. And like you said, once you're in a trade, you don't know. But the only reason why we are traders is because you're trying to stack those probabilities in your favor. You know what I mean? Spending times on the charts, learning how to read price action, getting a gut feel for. I still believe in a gut feel as well. It only comes with experience, I believe. But you've seen this more than enough times to identify it while it's playing out and then act accordingly. And that's all you could do, really. What happens after that is really out of your hands.
Yeah, no, for sure.
Yeah.
Woo! This vodka is strong, man. No, it's water. Promise, it's water.
All right.
Yeah,
Red Bull vodka.
I am seeing on
Do you want to share your screen again?
Yes. Let me quickly do that. Okay, so you can see that that blue line came all the way back down here, right on today's low. And then there's a resistance area as well. So now I'm interested to see how it's going to behave here. Hopefully it will break out and give me a retest. And that would make for a good opportunity. S2, I still think it's it's not impossible for it to go to S2. But yeah, so that's what I'm waiting for now.
A strong decline like that probably could very easily. I mean, it's also the NASDAQ, right?
Yeah, the NASDAQ, yeah, it's the beast. The beast. Yeah. It's like the pound Japanese yen of the indices world, Igor, you'll know the pound Japanese yen, don't you, Igor?
Yes.
It's a wild one. The pound yen can also, but the pound US dollar as well. I do like the pound US dollar. It kind of just, when it sets up and it moves, it just kind of moves. I'm going. I'm going. Yeah. So
And when
we
you
can.
tell
Sorry.
about British pound, Japanese yen. Sorry, because interrupt you, but I just want to
No.
tell what is the problem there. I taught a lot about that. Why I'm losing trades when I trade Japanese yen, British pound dollar, Japanese yen, and why I'm very good when I trade British pound, British dollar, US dollar. And I realize after my journal that I have a problem to find bullish bearish invalidation point when I trade British pound Japanese yen. It's very hard because that crazy volatility, sometimes I cannot find the zone when I can say I'm bullish above this zone, I'm bearish below this zone. And this is the problem with that currency pair, and this is why I'm avoided.
Yeah, no, that makes
Yeah.
sense. I just want to add to something like on this particular setup. Even if I do get an opportunity here, the probability is already lower because of the size of the move you already had for the day. Does that make sense?
Yeah.
But
Yeah.
I would still take it. But it's just that, what do they call it? Opportunity cost. You kind of you missed probably. Well, I mean, I don't know how far this is going to go. S3 is way down. Yeah.
Look, it's something I would take, for example, if we get a proper decent retracement. But
Yeah, I'll
always
take it.
scary trying to enter after a massive move like that. Yeah, it can be quite daunting.
Yeah, but I'll
entering at the current levels, that is, right?
For sure. Yeah, but if my criteria has been met, which is it breaks out of support and it retests, then I would take it. I would definitely take it because the criteria has been met. If it doesn't work, I'm not too fussed about that. Okay, now it comes
S2
lower.
is still in range as well, right?
Yeah.
What is that? Round about 19,355-ish somewhere.
The low? You mean the low or where it's right now?
S2 on your 15-minute chart there.
Oh, S2. Yeah, S2 is at 19,374.
Oh, I see. Okay.
19,374. So we are now at 19,465-ish. So yeah, quite some distance, but S3 is like way lower. And if we look at the daily time frame, yeah, completely took out yesterday's low.
Yeah.
So sorry about that. I get a lot of sales calls. Oh man, do you want new insurance on your car? Like, you guys called me yesterday and the day before and the day before that. Do you also get that, Igor?
Yes,
in your country?
And cable.
Oh,
This is the offers I have every single day. Please, you will get 1 year free. Just that.
Yes.
Yeah. That's not bad. A year free. Can you cancel like just before?
Jannie, you can actually in South Africa go onto some registry and remove yourself from these cold calls. It takes a good 3 months or so before it actually takes effect. But I've just tried it out and I haven't had any in a very long time.
I definitely need to check that out because it's really annoying. I just had one now in the middle of a very important trading session. It's unacceptable.
Yeah, after the move you've missed.
Yeah, oh man. I mean, yeah, usually do you also find that when you trade the S&P, but you also trade the NASDAQ, right? Or
yeah.
Do you also find that the first 15 minutes can really lurk you into a position?
Oh yeah.
And like make you believe something's happening, and then the opposite happens.
Yeah.
But not the case today. So that's why I was like, because it just moved, perfect entry, but just not the right time.
Yeah.
But I just hope we're going to get a break out of that support area, and then because you can see on the 1 minute as well. I know these lines are on the way, the support resistance lines, but just try to focus on the price action here. See, there's the breakout. If you look here, it's exactly the same thing. Lower high, right back to the support level. Now you just wanted to break out. Does that make sense?
Yeah.
So, but we'll see if we can get that. Doesn't want to break through. And when it breaks through, that means it needs to close below.
Okay, not wick.
No, not the wick. It needs to close below because remember, you want to very similar to look at the 15 minutes. Yeah. right? You see, it breaks through, the close is below the breakout area, and then you get that retest,
Yeah.
and then the continuation to it. So
Yeah,
this
that's what
is
I also
now,
like to see with when I think I'm dealing with liquidity sweep. Not just a wick. Especially on a smaller time frame, at least a minute. I want to see something close, maybe make it a little bit more of another low and then retest, or
yeah,
reverse trend back to the other side.
yeah. But so far, like now, if you look at that price action, it just found support. It just found support on the low for today, which is on the 15-minute, where you can see that, and now it just bounces off.
Yeah.
But the only issue, not I wouldn't call it an issue, is we'll see what happens at the next 9 minutes. At the next 9 minutes, if this ends up being a bullish candle and we don't get that break, then do you see what this starts to look at now? Like now, it's going to be like this big drop and this bullish reversal candle. Yeah, hopefully that means we can get a steeper pullback to this resistance area, or maybe even the VWAP.
Yeah, which
For an
might be
opportunity.
happening now.
Yeah, it might be happening now.
Could be like a little zigzag to the upside as well.
Yeah, we'll see now, because remember, I've marked these two, like this, that's the high, the lower high, and now we get this.
What is that white line on your 1 minute time frame? That's also the VWAP, right?
Oh, this one, yeah.
Is that the first standard deviation?
No, let me just delete all these lines, because it was busy. Now it's really busy.
So I'm showing like this on the chart, but I can't show on yours.
No, it's okay. Let me just quickly. Oh, just delete these lines. Okay, this white line is an EMA. So you have an EMA, and this dotted line here, that's the one standard deviation.
Okay.
That's the one standard deviation. So let's see what it does, because this resistance area here that's been marked over here, I'm pretty sure that's also this 15-minute candle's high. So we'll see what it does there.
Cool.
I'm hoping for it to go back lower, but we'll see how it behaves at those levels. While that's happening, Igor, do you want to maybe share a personal story of your childhood, anything like that?
I have something that happened here. Just I wanted to see, and I will share that. So not this, it will be this. Okay. I will wait just you to see. Okay. So as you can see, the same thing that I just talking about half hours ago. So we had one price rejection, another, and now we are again, like I said, bullish. So I'm 20 pips in profit, and I'm sure that we are going here up to 1.3. So this is the something that just Richard talking about. This is the gut, something that you see so often. So just you just know what will happen, but you cannot describe why technically. Maybe sometimes I can, but this is that false breakouts that we have just after the either US opening range, either the UK opening range, that we have a false breakout. So very often, like I talked earlier, when we have a morning session for British pound dollar, for example. So if we are bullish, very often during the opening range, we touch the Asia low, and then we start to go higher. And now, as we can see here, we touch this magical level at 1.2950 and 2 times rejection, and we are pushing higher. And what is beautiful today, what I can feel, is that next 5-6 hours, this trend can be bullish. And sometimes I feel, okay, it will touch 1.3 without new high, but sometimes in the last or two last hours of the daily session, we can see the new high, which can be really, really great if you have some trade. And sometimes I just close my trade just before the midnight sometimes. So that can be fantastic. But I
was going to ask, so you will actually swing trade for like sometimes even weeks on end, right? If you're in fortunate position like that.
If I have some crazy push, for example, let me create scenario for tomorrow. If I see, for example, that today we get the new high, so the high about 1.3, it can be 1.301, 1.302, 20 pips, 10 pips above this level, but it is very important because I know when that happens, the next pullback will not be 1.2950. The next pullback will be 1.2970 or 60 sometimes. And we're getting just higher and higher. And if we have a beautiful news for British pound dollar, actually bad for US dollar, that can really, really push the market sometimes 100 pips. I had a lot, few times that I have a trade, for example, 50 pips in profit or 40 pips in profit. I put my stop loss to be break even, and I wait the news. So if there is a slippage there or some crazy movement, that slippage will be maybe 50, maybe 20, maybe 30 pips. It will not be so huge usually, and I will be protected. But if the market is on my side, it can be really, really beautiful because this time, like I said, two scenarios. One, nothing change, US dollar in bad shape, 4.5% interest rate, okay. But possibility number two, we have a interest rate cut before the June. That can be really, really huge. And after that, I'm sure that British pound dollar and euro dollar will touch the sky. So this is the something that sometimes the intraday trade can become a swing trade. So we will see what will happen.
Okay, very interesting. Yeah, I think Igor, like when you said like you have this, I think Richard, you also mentioned about this gut feel. That also I feel has a lot to do with the market's personality. Like every market has its own personality, I feel.
You're
And it's almost like, it's like knowing your own child. You kind of, you get a feeling you've seen this before. It's done this before several times. So
absolutely.
Sometimes it may be difficult to explain to people exactly what you're looking at. It's like, no, I've seen this before, right? It does that, and then it breaks high and comes, and then it just sweeps at the bottom. And then at the moment, if you look at those wicks on the right-hand side, you've got those two big rejection wicks, and is that at the 50 Fibonacci level?
Yes, and 50 the Fibonacci level is there, and the 1.2950, which is very important level for British pound dollar. So the both things align.
Yeah. Okay. Very interesting. Well, so are you going to leave the trade open during FOMC, or are you going to play that one?
This is the plan. So if we just touch 1.3 without new highs, I will close the trade before the midnight. If we have the new high today, for example, 1.301, 1.302, something like that, I will leave my trade, and I'm waiting tomorrow to see that trade to become a swing trade with a huge profit.
So you will leave it open during FOMC? That was the question.
Yes, I will. I will do that. Yes.
Okay. Yeah, I feel like what do you? Okay, yeah, I think like spreads is more an issue with NFP. Oh man, have you seen the spreads on NFP?
Yes, I know that.
Wow, I've seen spreads like honestly 60-70% of the daily ATR. Massive spreads. And you're like, there's no way you can like do anything. Like whether you like, even when you write, it will just like, you'll immediately be in such a massive loss.
Yes, I know one Russian guy. He created the algorithm for NFP, and I was surprised how successful he is. So what's happened is that a lot of brokerage companies know about that algos during the NFP, and they protect themselves using that high spreads. So I know a lot of people that try to exploit the market, and all that they do, they know what to do. So either the NFP, for example, can be used, or I know a lot of tricky guys that use ball trading, for example. They find some algorithms and
Tricky
they
guys.
know to make that.
Yeah.
So,
Like, well, it's interesting you talk about EAs, because many years ago I played around with EAs as well. I eventually came to the conclusion that manual trading is just far superior.
I bought
Well,
all of the EAs under the sun.
but I had like this particular one was because I worked with a developer that could do things that far beyond my skill level in terms of coding. Where like I had this strategy that was performing really, really well during certain market conditions. I think it's true for most EAs, right? But then when it didn't work, it will just completely go wrong. I said, okay, so we developed something that instead of the EA placing trades, it will place ghost trades. So what that means is the EA will place the trade, but not on your account. It will kind of just keep track of the fact that it just opened a trade, where the stop loss is in the take profit. And then that result will get plotted on its own chart. So you almost like create.
It makes a decision as if it would have taken a trade.
Yeah, and then the result will get. There will be a record of the result, and then the next trade and the next one and so on, and then eventually it will plot a graph. So it's almost like an index, if you will, in terms of the results of the strategy plots, just like a results graph on MT4 or 5. But you haven't taken any of those trades. So now you have this results graph. And then what I did was I applied technical indicators on the results graph. Right. So like it started with say an EMA, because like when it works, like I said, it works really well. So then it will be above the EMA of the results graph. And then when the results starts to drop below the EMA of the results graph, then the EA will stop placing trades on the account, but it will still continue to plot the ghost trades on the graph.
Interesting.
One question for you: did you use TradingView for that expert advisor? On which platform did you use that?
The expert? No, it was on MT4.
MT4. Now, just to tell, maybe someone should watch right now this. In TradingView, they put in the Pine script a code for the ghost trades. So believe or not, so they made that mistake in version 2. And if you see
the ghost feed, wasn't it called? I remember that.
Yeah, and if you see when you watch the expert advisor on TradingView, that is a version 2, just do not use it. Or change to the different version. For example, this is the first line of code in expert advisor. So just change to be version 4 or something like that, because in next versions, they remove that. But in old versions, they'll still stay and still can just trick you. So it's a really problem in programming, and a lot of bad people exploit that and try to sell the expert advisors and etc. I see all the time. I have the problem with competition that are really, really bad competition. So just for the TradingView, if someone watch right now, just to know, version 2, do not use.
Okay, well, I'm not actually using TradingView.
You're on Motivewave, right?
Yeah, I'm using Motivewave, and because I mean, TradingView is you have to pay for it, and like everything's free. Like especially VWAP, volume, those are typically things you have to pay for. So I'm like, I've got everything I need on here, so I don't really need that. And
so you got your brokerage account, so they obviously give you data and on all those tools then to your disposal.
And then exactly, and MT4, MT5 is also free. So, but I know, I mean, I understand that it's a TradingView is very popular and a lot of people use it. There's nothing wrong with it. I don't understand why you have to pay money to put. Why do you have to pay money to put a moving average on your chart? Like, why?
And why, if you want to have 5 charts, you need to pay, and the premium.
Yeah, but doesn't that change if you actually connect your broker to them?
Yes.
Oh, does it?
Yeah, I think so.
I think that you can do that. And
but only the supported brokers is the thing, which is pretty limited.
Yes,
in my mind.
Yeah.
Just to tell something. Sorry, Jannie. Just we have one comment from Jay Hay. Just 20 minutes in, and the way your breakdown Forex is clear, honest, and easy to follow. Truly motivating. Keep it up. Just to say thank you that you watch this live session, and thank you for your words. Just that.
Yeah. Thanks, JH. Thanks, man. Glad you find it useful.
Awesome.
What do you? I'm not sure if you're still watching, but is there any particular market that you trade, or do you look at multiple markets? Anyway, maybe he's not there. I may be talking to a ghost. So I just quickly want to show you what's happening now with the NASDAQ and what I'm waiting for.
Okay, I will stop sharing.
Okay. Oh, you can see it. Okay, so we now this is the point of control now on the 1 minute time frame. So we just hovering it around. That just means that most of the price action over the last few minutes has been happening around this area. I'm still waiting for it to. There's two levels I'll be interested in. Well, I've already mentioned that, but still that's the case. But look, this is what I said to you earlier. If the one standard deviation and resistance line can come together, that would be really that's really good. Because the problem is if there's a gap between the resistance area and the one standard deviation, it can be like, okay, is it going to go to this one or is it going to break out to that one? And then it just means you may have to take two trades, because it's going to break out of the resistance and maybe looks like it's rejecting, and then you enter the trade, and then it does go to the one standard deviation. So you'll get stopped out, and then you have to take a second trade. I know this is very close, and I'm talking about something that's a bit further, like over here. Again. So if you see, if there's a bit of a gap, but it's not that far, it's far enough for you to have to take the loss.
Yeah.
And then having to wait for a price to go to the one standard deviation. But then when they line up like this, it just makes it much easier. So because if it does fail there, then then if it doesn't reject again, I will take a trade for the second time, and sometimes I'll lose both, and that's fine. But there's not two areas I need to focus on. That's pretty close to each other. I don't know if that makes any sense.
So where's that lying at the moment, price-wise, where they meet?
It's right at 19,530.
19,530. Gotcha.
Yeah. So that's the price level, but it definitely slowed down.
I mean, it's also slightly below what was this? Yesterday's cluster lows. What's the date? It's 18th. So I'm talking about two lows that formed on the 16th and the 17th. Okay, 16th being Sunday with the the US Open on Sunday, their time.
Okay,
I think you got a low there around about 19,542. Another one on Monday, very close to it, 19,544.
Yeah,
so now it finally broke out. They could potentially be testing at slightly above that area that you're looking at, but very close for the NASDAQ.
Yeah, like if you look at the 1 hour time frame, you see this is a support level right here, which it did come and test. You see that on the 1 hour. So this was based on the 14th of March. So that was when?
Friday.
Oh. Not Friday the 13th, Friday the 14th. And that was so it was the low of that, and then now it's pushing back up. So now we're getting close here. So I'm hoping to get something. And if it doesn't work, that's fine. I just want to demonstrate the thinking process, the what do you call it? Yeah, the process. the process. So we're getting close to that resistance area. Now I just want to see if it's going to reject. And by the way, this will be the first time I've actually placed a trade on this platform because I don't.
Again, are you just going to wait for a rejection first before as a confirmation that it might be reversing, and then get in?
No,
or are you placing a limit order there?
Okay, just touch it now. Okay, so let's see what happens here. Sorry. Yeah, like what I typically like is I like it if it just breaks out and then fails. But obviously sometimes it's not an exact science. Sometimes it can just come very close. And then just reverse. So I'll look a bit at price action as well. But we'll see what happens here. 15 seconds. This is what, as I said, this will be the first trade I place on this platform. So if it goes wacky, whatever, then forgive me, I'll sort it out after. Okay, so there's a rejection. Now, if it moves lower and breaks that low, I may get in. See, because it did touch that, it rejects it. Now, it's all about the new candle. Okay, what the hell? How do you move? Sorry, man, I just want to figure out something. Yeah, that's a stop loss. Okay. And then a take profit close to the previous lows. Maybe I'll go for a 1 to 2. Okay, so if this one fails, it's fine. I'll just look for another rejection at that level. And if that one doesn't work, then I'll probably stand back. Okay, but does it make sense, the process?
Yeah, absolutely.
Yeah. There's a stop loss. So the stop loss is just above there. Okay, it's pushing higher. Go down, Nazi. Don't you dare. Don't you dare. Okay, I'm still on the trade. Come on, go down. Okay, we'll see what happens there. The next one is probably like if it breaks out and then a failure from the breakout. Yeah, I'm just pushing up. This is very weird. I'm so used to MT4 when you have the line drawn across the entire screen. Over here, you don't quite get that. You only get the short lines. I'm like, oh, where am I? Where's price? Where's the stop loss? So there's the stop loss. So let's just hope it rejects there. Where's the position? Okay. All right, so let's see. Okay, it does look like it's rejecting now. Come on, man. Okay. We've got a few seconds left in this candle, so
you're willing it to go down.
I'm willing it. Don't you talk to your trades? I talk to my trades like all the time. Go on, boy, you can do it. I believe in you. Yeah, and all that. No. In all honesty, if you get very nervous about trades, or whether it's going to work or not, you're just trading too big.
Yeah.
Like the outcome of a trade, like if it's a losing trade, it should be so insignificant. It's like, Now that also means you're not going to get very excited about a winning trade because it's going to be slightly bigger than your losing trades. But it's all about over a series of trades, like how that works out. So can this thing just come down now? Man. I'm gonna act all stepdad on this thing right now. Okay, it's coming down a little bit.
Yeah, the ES is dropping a little bit.
Is that? Okay, but Igor, does it now make sense how you use VWAP?
Yes, of course. Yeah. Now this kind, I have a VWAP session. So there's only one line, and I use it during the one session. So it's a different indicator. This is like pivot points.
Yeah. It's just support and resistance, but
yes,
that's just how you use it. And as I said, like when they come together, that's just beautiful.
Yes,
makes it a bit easier. I can get all big mouth when it works. If it doesn't work, it's like sometimes I promise you, sometimes it works. I promise. Yeah, but we'll see if it goes to the take profit. I don't even know. Like on MT4, I still have to figure out how do you. Because I use this software for the analysis, as I said. But on MT4, you can just look at what's your take profit and what's your loss. I've got no idea what my loss is here. Like, how do you view that? Anyway, I'll sort that out later. Okay, so look at the 15-minute time frame now. Beautiful rejection there, and then on the half an hour as well. So I'll just keep an eye on there. All right, guys. Are we? I just want this to close on my face. Come on, boy. You can do it. Come on, boy. Go, go, go.
Yeah, looks like you're on the right side there. That's good.
Yeah. So, but it just doesn't want to. Just want to. Yeah. I know we are out of time. I was hoping for the trade to work out in my favor before the session
Well,
starts.
it's already 1:45.
Yeah, but hopefully the thinking process made sense and people can see exactly what I was looking at and so on. And that's what it's all about. All right, guys. It was a great session. Richard, it was great talking to you. Igor, always nice to talk to you.
You too, man.
And yeah.
Nice seeing you again, Igor.
I
wish you a great day.
Good luck with the FOMC tomorrow.
Yeah.
Bye.
All right, guys. Cheers.
Cheers, everyone. Take care.
All right. Bye-bye.
Bye.
Hey. Hey. Hello, everyone. Hello.
Hello, Michael. How are you today? Good to see you again.
Oh, I'm great, Paul. How about yourself?
All right. Is it just me and you today? That's fantastic. Okay.
I believe so.
Miss Igor, of course.
Right.
So what's happening in your end of things? What's going on?
Not too much. I'm actually looking at this EG trade right now. It's kind of acting a bit funny. Not really sure. I need to confirm a bit tighter than this. And yeah, I was looking at GU and GJ. GU is kind of close, so I'm looking for a little bit more confirmation on that one as well. And then GJ was definitely no man's land for me.
I'm not going to say that today. I'm going to try and avoid saying it.
Say, look, guys, there is a point where the trade is not long or short. It's I don't know what's happening here.
Yeah. Well, do you want to show us what you've got? Do you want to start off? Does that work for you?
Yeah. Let me go ahead and jump to it now. Actually,
so nice chilled session.
Yeah, let me look at this EG trade really quick because I just got something over here. This looks like this might work out. So this is one of my 5 trades, of course. Those are the only ones I'll take. Let's see here. This is my trade number 3, which actually happens on the 15-minute, right? So for one, I'm going to set an alert right back up here, just in case you and I get in deep conversation and if I miss it and it comes back to me. So
you always set alerts, people.
Yes. All right. So this is my ID 50 move, right? I'm going to break this down here in a second. As you guys always know, I just always like to start off because this is super important. I got into a really deep discussion with one of the traders that we're coaching over at WB, and I was letting them know that, hey, he's doing really good. Like, he knows his percentages, he knows his hit rate, he knows a lot of things that most traders don't know. And I was telling him, I said, hey, you're doing a great job of not just tracking trades, but journaling. And I can tell this is where you're getting a lot of your information from. And this is what makes him, he's one of the most confident people in the group. He's one of the most active people in the group, and he knows exactly what he's looking for, right? So I really just give him his flowers and just kind of praise him and saying, hey, you're doing a great job. Keep that up, right? And then we kind of got into just a small conversation. I let him know, I was like, hey, this is working out for you great. Keep doing it. And I can promise you, I'm like, when I first was trading, I didn't know what I was doing. I had no way to track anything. But what I like to say is one of the biggest difference makers in me becoming consistently profitable is 2 things. One, obviously, is journaling, right? Because that gives you that extra edge, the extra data, so you can see what's happening, what's working, what's not, what needs to be refined, what needs to go higher on your setup list because it's hitting really good, what needs to go lower because it's not performing well, or what needs to come off because it's not performing at all, right? So just knowing,
there's a lot of people. There's a lot of people listening to you saying about journaling, saying I have to journal, right?
Yes, guys.
I mean, whatever you do, you need a methodology behind what you're doing, your planning and your assessment. So, probably whatever works for you is good. But journaling, spreadsheet, whatever, right?
For sure. So I currently use TradeZilla. I mean, it gives me a bunch of data. I really enjoy it. So that's what I use for mine. But I was just telling him, getting back to it, like that was journaling and the mindset, right? Because sometimes you take a few loser trades or you're like, this isn't working. I'm going to jump to something else, which is a big no-no, right? We've all been there. So I was just telling him that, hey, those 2 things, are huge difference makers. And he has his psychology good too, because when we do go on our losing streaks or, today was whatever the case may be, he's always still pretty upbeat. He never let it get to him. So, and to be honest, I think out of a lot of the traders there, he's one of the best. And
Yeah.
it literally comes down to those two things. He has his mindset together and he journals his trades. So he knows what he's looking for. He's not clueless. Right. So just wanted to touch on that briefly.
Yeah. Oh, can you continue? And I've got stuff to add on that. But yeah, it's a big conversation, really. Go for it.
Yeah. So that was really it. Whatever you want to add to it.
Well, the thing, I mean, I was having a conversation this morning with one of my students, and she was just trying to figure out how to process all the information she's receiving, right?
Mm-hmm.
And she'll say she spends, she'll do a few charts, and she'll look at what Bitcoin's doing. She'll get a sense of what the market is doing and how she can possibly trade it. But then she just feels frazzled by the end of the planning process and overwhelmed with data points. So I was saying that, look, everyone has a strategy, whether it's using a spreadsheet or journaling. Igor was talking about this just the other day with his frenetic journaling. And I just said to her, look, whatever works for you, but you need to assess that there's a problem. So you were talking about you having trouble with your kids and going to all their like soccer practices and swimming practices whilst dealing with trades and alerts going off. I'm like, what I do, and when I'm really, really having the market's great and I'm trading all the time and I need to keep my mindfulness, where it needs to be, I'll work on the charts. And if I feel lost, which we all do frequently, just go and do the football practice and without any charts and just think through, let the data sit in your head. Right. So there's many different techniques for processing the information, and it needs to work for you. But whatever you do, if you're becoming frantic when looking at charts, you're not going to trade well. So figure something out.
Exactly. I agree. I totally agree with that. Those days that does happen, you like I always like to say you're not thinking clearly and you're going to end up making a mistake or something. It's much better to just step away. Like just step away. Especially in the beginning when you're trying to learn and put all these things together and it's like, wait, I thought this looks like that looks like this. Is that backward? Is this right? Is this wrong? Calm down, woosah, take a step back. Let's come back to it at another time, right?
Yeah. I mean, the market's it's full of frustrations. It's full of, everyone else in the market is trying to take your money, right?
Yes.
They're trying to take your money. They are trying to, in crypto, we get a lot of bull and bear traps and fake outs and stuff. They're trying to emotionally manipulate you. I could sit here and say that this is a liquidity hunt, but the reality is they're trying to scare you because they want your money, and then they're going to go in the other direction. And you have to be centered in order to process that and see what's happening for real. And it's just time, experience, just putting in the numbers, doing it every week, every month, and then you get better naturally. So
agreed. That chart time, the infamous chart time, baby. Sweet. Well, cool. Let me just jump into this. It's so interesting how we have these conversations with these students and these other traders and just try to bring them on back to reality, right? And say, hey, just everything's fine. Just relax. This isn't going anywhere. Everything will be totally fine.
Yeah.
Right.
100%.
Well, cool. So I always like to start out by just, mentioning the 5 setups in my playbook. Man, I cannot type today. It's because my nails are a little bit long. I need to cut them.
Top trading tips. Make sure you can still type.
I swear I can type at least 10 words faster, 10 words per minute faster. My nails are cut. Minimum. Right. So here we go again. So combo trade 3. This is my number 3 trade, right? So my ID50 trade. Man, it's going crazy today. Okay, the ID50, then my MRW off the 200, and then 5 obviously is my money trade, right? So these are, as I always like to bring up, my 5 setups. Now, number 3 is the only one that actually happens on the 15-minute chart, which is why we are here on the 15-minute now, right? So in theory, what I'm looking for on this particular move, and you guys know I love to draw my my ideology here. So, right, one is where am I in the cycle? Right, two is the pattern. Right, three is my higher time frame confirmation, and then my four is my entry signal. This might work out for us, by the way. Like this trade might end up going. We can take this live, so that'd be cool if it does.
Yeah.
But just to kind of get back to these, right? So these are my 5 setups, obviously, that's in my playbook. As I always say, they're all named. They all have their own characteristics, their own checklist, their own rules of engagement. Each one of them are entirely different, right? Like I look at these as 5 separate people. They all look different, even though some might look close, like you can tell they're related. They're in actuality all separate people, right? So in this particular one, I'm looking for number 3, which is my ID50 move, right? So I'll take this off. Now, when I get to the ID50 move, the first thing I'm looking for is where am I in the cycle, right? Where am I? That's what I'm trying to figure out. Where am I in this whole thing? Am I looking for longs? I'm looking for shorts. I don't know what's going on, right? So I need to figure that out first, right? So from here, I can easily see that first thing I have is this 5,200 cross, right? So this automatically lets me know this 5,200 cross here. I can tell that I am in level 2, right? Anytime I have a 5,200 cross, it's in level 2, right? A 1350 cross would be level 1. We'll get into that another time. But I can automatically tell that this is where I am, okay?
Right.
Nextly, so I know where I'm in the cycle. I'm in level 2. Level 2 longs, by the way, because 5,200 cross to the upside. So I'm not interested in shorts at all. I'm only interested in longs. So I put where am I?
Where am I? Where
am I? What kind of country slow is that? Where am I? All right, where am I in the cycle, right? So I got that checked off. I know I'm in level 2. Next, I'm looking for some type of pattern, right? Which I can see this. So once the 5,200 crosses, the very next thing I'm looking for is some interaction off of the 200 EMA, right? And I ideally would like to see a W pattern, how I have here now. W for longs, right? M's for shorts, right? So this went here, right? Simultaneously, I have, as you can see kind of right here, my market baseline went below my static. So this is the reload, which I love to see them do that as well. This shows me that we were just how we were talking about today, that they're inducing traders short at this particular point, right? So once price goes below this 200 EMA, just know that there's orders going short, pending orders going short on the opposite side of this, right? So they play this little game where breakout traders go short here and they yank it back. Those traders, some of those traders close their position short and go long. Other traders are have positions on going long at the 50. So they didn't tag on those traders as well. And then they do the ultimate damage thing here where they yank it back the other way. It's like, wait, which way is this thing going? So those traders who were long probably closed their position or just holding it, one of the two. The traders who were short again, or maybe again, or just still holding it below the 200, right? So they went short, they yanked it back again. They are whipsawing this thing back and forth. We got traders trapped on both sides. They don't know what to do. And then all of a sudden, you got this little consolidation period, right? Where they just collecting contracts. Everyone's just waiting, biting their thumbs, right? Biting their nails, trying to figure out where is this thing going, right? And all of a sudden, yoink, it yanks it away from them. If you were long, hey, you was on the right side of the fence. If you were short, you are either down big or your stop loss got hit, one of the two.
Yeah.
And you're waiting for it to come down, to come back to your entry price, right?
Yeah.
Now, knowing where you are in the cycle, as I always say, is so important, right? Because me, hypothetically speaking, I wouldn't get caught in this at all because for one, I already know that I'm long, right? I'm not taking shorts at all. So I'm only looking for longs, right? Now, in this exact period here, I need a W pattern. So I have my first leg, right? First leg is here, right? Then I got my second leg, which is here, right? I'm not interested until this has completed, right? Until we're over here, right? So this whole thing where they whipsaw back and forth, I just watch the show, basically, eat my popcorn. I'm just innocent bystander, just looking, right?
And how the battle ends up.
Yeah. I'm just watching the movie at this point. I'm not even engaging, right? So now once they hit this move and I see them run and take off, oh, now I got my bias. Now I'm definitely long, okay?
Yeah.
So one thing that needs to happen once for this setup on the ID50 move is, the first thing that happens is, right? So ID50 move needs one, it needs a W or an M off the 200 first, right? That's what it needs first. So we have that. Now we're good to go. Next, I want to see a small run, right? Which is this run up here, this green, what these green ticks or green bars are, right? So it runs up. And then nextly, I'm looking for the last, well, not the last thing, but one of the third things I'm looking for is the first touch towards the 50 EMA, right? Which is the blue one, right? So as soon as this thing runs up and it comes back and touches the 50 EMA, now I'm interested in engaging into this. I'm not interested nowhere near any of that to the left, only right here, right? So I got my pattern, as you can see here. I know I'm in a cycle. I got my pattern. Next up will be higher time frame confirmation, right? So next, I like to kick this up to the 1 hour chart. I want to make sure that I am on the right side of the 13 EMA. So I'm going long. I need price to be above the red 13 EMA here. Now, in this case, right now, it's not. I'm sorry. The last candle is what we're looking at. The last closed candle, right? So price is above the 13 EMA, right? This red open candle does not count because it's still an open candle, right? This thing will be open for another 42 minutes. So this doesn't count. We're only talking about closed candles.
Yeah.
Right. So this last one, we do have 4 hour confirmation. So we do have our higher time frame confirmation as well. Oh, let me make this green. Just, I like to keep everything congruent. Greens for longs, right? So we have our 4 hour confirmation here as well, right? And then the last thing I am looking for. Oh, here it is. The last thing I'm looking for is my entry candle. We can take this off now. We don't need this anymore. The last thing I need is my entry signal, right? Which would be a close above the 13. So we have this slight W structure here, right? We really, the last thing we're waiting on is for this to actually come up and close above right here to take this going long.
Yeah.
Right. Stops go below here. And whoa, man, is that a TP high? So that is good, right? We got plenty of room. Let me shrink this down a little bit, right? And I'll be looking at for some type of move like this, right? Stops below here. TP is all the way up here. Now, obviously, it might not do this, but this is a 15-minute chart, right? So the candles are a bit smaller.
Yeah.
So my last thing I'll be waiting for is, this is a little sloppy. Let me delete all of this. The last thing I'm looking for is this close above this 13, right? And I would really ideally like to see it close above this blue tracer. Like this blue dotted line is yesterday's high. If I can get this candle to close above yesterday's high with everything else that I just mentioned, this trade will be good to go for a long.
Yeah.
Right. So I just want to see this nice close maybe here. Stop below. And my TP is all the way up here.
Yeah, it's pretty good.
Right. Nice little 2 for 2.7. Nice. Right. So This is my ID 50 setup that I am looking for to confirm right now, right? This can confirm whenever it wants to. Like, it's only 11:20 now. Ideally, I would want this to close at 12 o'clock latest, because I really don't trade currency pairs after 12. I only trade the indices. So like S&P 500, US 30, gold, Bitcoin, crude oil, silver. But that's really it. Anything that's a currency pair for me, it needs to be taken between the hours of 8 and pretty much 12. Anything after that, I'm not really interested in. So that kind of dries it up. But so this may or may not confirm, but this is what I'm looking for on this particular setup.
No, that's really good. I think it's what we were talking about earlier. It's, you know, your approach with these, you know, very strict parameters for entry, but very, very honed strategies and approaches, which you know how it works typically with probabilities. This is, I mean, I'm seeing your process and I'm following it. But for others, what you're doing is you're interpreting signals on the fly. You're thinking, well, obviously that little battle you were talking about with those what are essentially, you know, potential bear traps. It's understanding that if the price action is sitting essentially above, you know, those moving averages, then the bulls have won, and then it's just a, you know, start planting your seeds and enter. I mean, on a basic level, but that's a lot of information for beginner traders to quantify, to make sense of. And your approach, and I really applaud every session you are reiterating, this is the strategy, this is how it is, because that's how I suppose you'll be doing it in the real world, and that's what everyone else needs to do. Not cut corners, just go through the motions, check boxes, and everything. So yeah, I mean,
100%. And I just want to add on, and I'll let you get the screen. There's not a time, right, where I will skip any of these. It just doesn't happen. I've been down that road before. I lost, and I don't like it, right? I'd much rather be on this side of the fence, winning trades and staying out of trades, than being in bad trades, right? Like, this is the process. The only difference in what I'm doing now and what I would do is I'm saying it out loud. That's the only difference. Any other time, if I'm just by myself or whatever, you know, maybe I'm just taking a trade and I'm not in front of my group. I'm going through the same process just in my head. I'm not saying anything, but this is the exact walkthrough I will go through every single time, like clockwork, every single time. Yeah.
I'm thought about thinking about your process. I just want to maybe just give people an insight into one of my earlier processes, and it's not really a process. I was thinking about this the other day, because spending so much time listening to you guys and all your expertise about, you know, all the different types of markets. When I look at the price action from the Forex or the S&P, it seems very alien to me working in the crypto space, which for me, you know, I was looking at a lovely chart yesterday. I don't know which Igor was showing us, and it was just this lovely, just so lovely, nice little run up. It's so nice. It's like a perfect line, and like I never see that in crypto ever. It's either like this, right, or you know, and it's a bit of an alien world. So if I just try and so for me in crypto, you protect yourself, as in any traders do, as you're talking about. It's essentially confluence, the confluence of ideas. You know, are we above this moving average, which gives us a bullish bias? Therefore, these other things have a higher probability of playing out if I see them, and that makes sense. But for me, it was all about don't enter until you've got a certain amount of things. So this is tell me when you can see this very straightforward checkbox chart.
Yep, I can see it.
Okay, so I don't really use this anymore, but this is something which I was struggling, as we were talking at the start, you know, about juggling all of the ideas and getting everything we're seeing and all these conflicting signals across the money flow and all these different, you know, it just gets overwhelming. And I constructed this basic HTML checkbox list to just calm me down when I'm approaching. So I would approach a trade like this. So do I have an overbought RSI below or above 70, depending on whether I'm longing or short? Yes, I do. And there's a point system, but that's not enough, right? So do I have overbought stock? No, I don't. Am I trading with the trend? Yes, I am. Have I got overbought RSI on multiple time frames? I do. I do. So there's an issue. I need something to wait. So I'll go through it. I'm like, so, okay, so have I got a reversal pattern? Is there an SR flip retest? Yeah. Okay. I only need one of these things, but is there a rising falling wedge leading up to that SR flip? Yes, there is. So there we go. Is there bullish divergence? No. Is there a bearish cross on the MACD? No. Is it double support and resistance? Yes, it is. I've got a moving average. And then are we at support and resistance? Is there news in favor? And then we just click a few more check boxes. And now I'm like, okay, it's still no trade because I need additional confluence. And then if I wait for it, trade, and I'm off, right? And this practically is not a strategy. It is a psychology refining process, which I use to check myself, essentially. If that makes any sense. I mean, what? Yeah. But it's a training tool. I mean, what are your thoughts on that?
No, I mean, to be totally honest, I truly believe that, and I can imagine that, as you said, you don't use this anymore, but in the beginning, when you first start, you need some type of roadmap, some type of something to keep you on track, right? Whether that's a checklist, sticky notes, you need something, because in the heat of battle, things are all over the place, right? It's like, you're like, man, I forgot that again. Or like you keep forgetting this, or you forget something new, or you learn something new and you want to add it to it. And next thing you know, like, man, this list is getting longer and longer and longer and longer. So you just need some type of something to keep you grounded and together, right? I have one. Let me show you. Let me show you mine.
Let's do it.
So I have something similar, right? And this is in essence the checklist that I go through when I'm deciding to take trades. Now, I don't need to do this obviously now because I know this, but in the beginning, this is pretty much what I use. And in my trades, a lot of these main factors are here, right? Yeah. Can you see this?
It's coming.
All right. Yep. So perfect. So this is the trade we're taking today, right? I have a few of these. Like there's 4 more because again, I have 5 of these. So I have a checklist for each setup, and I have it pretty much laid out like this, right? Like it's so funny because when I first started, I'd say teaching, like I wasn't the best teacher at all. I just knew what I knew and that was it. Like no one's ever pulled it out of me to make me justify why that is. I kind of just knew it or thought of it like this, right? And so my best friend now, who actually trades with me on a regular basis every day, he's the one who kind of pulled all this stuff out of me. He's like, well, what about this? He's like, I got a question. Why don't you do it like this? I'm like, well, you see this right here? You can't do it like this if it does that. Oh, okay. I'm like, yeah, you want it to look like this. I'm like, okay, cool. Next thing you know, he asking more and more questions just like that. And slowly but surely, I have a list of, I'm like, you know what? I've actually then curated this whole if-then scenario realistically now, thanks to him in essence. So it made it a lot better and easier to teach people. But just kind of starting.
It's the same principle.
Yeah, this is kind of what you have basically, right? Like it's just a little bit different, right? So always
better. Yours is probably better.
Right. So first things first, got to check the news because there's been way too many times where, again, I'm getting stopped out because I didn't notice that news was happening. So that's the first thing, right? Next thing is how I just mentioned earlier today, right? And this is so cool that you guys are seeing this, and I basically go through every day, but this is in concrete writing, right? Like I'm not making this up on the fly. This is the rules. This is what it is, right? So next would be, I can only trade my Forex pairs between 7 and 12. I just said that a moment ago, right? Indices, I can go a little bit later, right? Next would be check the high and low of the week, right? So I want to see where I am, which on my chart, that's what these, like if I was to zoom out here, I don't really have to check the high and low of the week for one, because that information is already here to the right-hand side. Weekly high, weekly low, so I don't really need to check it. I didn't have this template or this custom template that we're looking at now. I didn't have this then. So when I got my dev to create this, I had to make sure he put all of this stuff in here for me. So it just made it a little bit easier. I don't have to like actively check that. But another one, it says, right, zoom out, see the last 3 to 5 days. I used to trade so close. Like I'm like right here trying to look at charts, right? I'm like so close. And like I feel like I'm standing at a tree and I don't even notice that I'm in a forest. There's a bunch of trees around me. I need to zoom out, like get a better view of the market. Like where is price going? Like where you think is going? Like zoom out so you can get a better understanding of everything, right?
Yeah.
Right?
Mr. Gold,
MRW structure on a 200 EMA. Yeah, for sure. You can't be so close, right? Like if I was to get so close in the camera, you can't even see my face, right? Like if you can't even see my face.
Not there now, but that's. but I will tell anybody that whatever you're doing, whatever time frame you're trading on, zoom out to the daily on whatever, and just get perspective, get the big picture, right? Because you'll miss things. So it's very important, very, very important.
Yeah, you gotta zoom out so you can actually see what's going on, right?
M&W structure.
Cool. So even here, MW off the 200 EMA has been completed, right? We went through that whole pattern on the 15-minute, right? When I just said that, hey, I'm looking for this W pattern, right? This W pattern here, as I pointed out, right? I said it completed, right? Make sure the W pattern has been completed. So we got that, right? Clear market baseline reload has been completed. I mentioned that as well, right? Everything that I'm going through now, I've already just said moments ago, right? But the market baseline, which is the yellow one, is going below this static line, which is this dash one, right? So we started up here and it kind of made this motion right here, right? This for me is what I call the reload. This is super, super important for me because on my M's and W's, I need a reload to happen because this is them inducing traders to go the other way, which as you see, they did. They do a great job of this. So they induced them the wrong way, right? Collect those orders, activate those pending orders, and then they want to pull it away from them, right? So I got my reload, right? Market baseline is now on the correct side of the static, right? So when I decide to take this trade, right, the market baseline, the yellow one, is above this static line, right? I'm going long, so the market baseline needs to be above. So that's checked. It's on the right side. Obviously, I can go through all of these, but you're kind of getting my point, right, guys? Like everything that I just said is on this exact checklist, right? Yeah. Like everything. And then I have at the bottom, right, I have like a few what I call pro tips. These are the things that's kind of messed me up before, right? Show up every day. Don't get GA'd. I can imagine EA'd. One day I got to the market late and I had a beautiful pattern on EA and I was hurt that I didn't take it because I didn't show up for some reason, right? Whatever the case may be, whether I was sleepy, hungover, lazy, whatever it is, you got to show up every day, right? Yeah. The market has this weird way of knowing when you're not there.
It does. I remember there was I was doing a short trade. This was before the bull market really kicked off, right? And in crypto, short trading is so much easier because most of the conditions are fearful. And I was just picking up something from the post office. This is when I was in South America, and I saw it on my phone and got an alert. And the thing was it was going to hell, which was great because I was in a short trade, right? And I was running back home, right, trying to get a taxi, right, just to get these profits because I knew a bounce was coming, right? Yeah. And I wanted to get it was epic profits, epic. And I'm just like, I got to get home because I haven't got the trading platform on my phone. And it always happens when you're sleeping. So you get up and you're like, where am I? I completely agree, which is why get some Post-it notes, have your plan. So if you do wake up in the middle of the morning, you just have to follow the points you've written when you were sober or awake.
Yeah, exactly. Exactly. And what I like to do too is like, I'm really good with the trading view. Like I like to, right? Like when I set my alerts that we talked about earlier, I put a note in here. It says ID50 move. So, I mean, most people have phones, whatever, but I have my watch. I have my alerts on my watch. So when this alert does hit, whether I'm downstairs, in my pool, whatever the case may be, I'm going to get an alert on my watch and it's going to say, hey, ID50 move. I know exactly already what's happening, right?
Yeah.
So super important to implement that as well. But the next part here, right? It says S&P 500 indice pairs can run after 12. Don't get S&P'd. There's been a time or two or several where I'm done trading at 12, my currency pairs, right? And then 1, 2 o'clock, right? You get a indice that sets up perfectly, right? It says clearly it was S&P that did this, but it sets up perfectly. And then I realized, I'm like, you know what? I can't treat the indices and the currency pairs the same. Like the currency pairs dry up around 12, but the indices do not. So be mindful of that, Mike. Right? So I got that on there as a pro move. If they move and you can't get in, it's a pass. Look for the next trade. Don't get GA'd. Right? So there's been a time, obviously, where I got greedy. I didn't want to miss the move. It was going in, like it was already running, and I thought it was going in that way, but I couldn't get in. I ended up jumping in anyway. And you know, that's a big no-no, because when you do that, your whole RR is messed up, your position is poor. And if they come back and, you know, wick you out, or let's say it's time to move your stops to break even, but your stops to break even is late now, you know what I mean? It just kind of throws off the whole thing. So, you know, don't do that, right? Another one would be, hey, if they move and you get stopped out, do not re-enter the trade. Just look for the next setup.
Oh God, yeah,
right?
100%. That's so important. That very one, because you know you just chase it. Then you're just chasing something. It's like a dog chasing a car. You're either going to get hit by another car or you're going to run out of breath. Right? It's just
one of the two is going to happen. One of the two for sure. So yeah. So the next one would be
baby candles.
Yep. Don't trade those baby candles. Right. So those little like let me point these out. Right. Like look how all these candles. Let me delete all of this stuff. And this is, as you see, this is trying to come back around. But look at all these candles, nice and right. And then you look in this little zone here, and they're all little, like super small candles. Another great example is we took GC this week, right? GC. This is a great example of baby candles.
Yeah.
Whoops, it's on a 1 hour chart. Look at these little baby little candles. Like this doesn't count. To me, this is you can't. I gotta zoom all the way in just to see them. Like they're so little. Like leave those candles alone. Like these are indecision for me. Like there's nothing there. You're squinting to see it. That's not how it's supposed to be done. Right. Don't trade those baby candles as you see. Check your mood. Can't be hungover, sleepy, unprepared, etc. Like don't just, like this is a high performance sport. If Steph Curry or Kobe Bryant or Michael Jordan, if they were sleepy, hungover that day, best believe they're not going to have a good game. Like that's just how it goes. That's common sense, actually. So you shouldn't think that you can do that and show up here and still perform at a high level. That's asinine, right?
Well, we were talking about this in the podcast a few weeks ago, and when I was describing, like, for me to be at my best as a trader, right, I have a plan over multiple weeks for what I'm trying to accomplish, and I'll take a trade, it'll be successful, and then I will take a couple of days, I will do yoga, I will go walk on the beach, whatever I need to do to get myself, because and when I don't have the time to do that, I'm not operating at my best, and I know that, so I trade differently. But it's all of this you don't see when you Google like trading plan or learn to trade. There's nothing which talks about this stuff, which is because everyone can learn, what divergence is, or learn a system even to follow. But it's like unless your head, the instrument which is trading essentially,
right,
then it's gonna, and that's what it is. So I don't mean to go on a rant about mindfulness and meditation or whatever, but whatever works for you, figure it out, because we're all trying to be get our success rate up, be the best trader, the best version of ourselves, the most professional. And it's not, you can't just sit down, put your jacket on, and that's going to happen. You have to work at it. You have to put things in place.
They make it seem like you're trading from some laptop or some secluded beach. You're in your pajamas or your bathing suit, and you're just banging out trades with 15, 20 minutes of work, and you just made a few thousand for the day.
10 grand.
Like, in reality, that never happens. Like, that never happens. There's so much work that goes into this stuff behind the scenes that's never shown. Once again, Michael Jordan, Kobe Bryant, Steph Curry, like, they put in a lot of work behind the scenes. And what we see them do on the court is just them executing what they've already done behind the scenes a million times. Right? It's no different. There's literally no difference. And then just to kind of wrap it up here, obviously I'm not going to go through all of them, but check the candlestick pattern for further confirmation. Look at the candles, right? Because sometimes those candles look funny, and it's like, that's a reversal candle. Why would you try to take that in that direction? That makes no sense, right? So just be mindful of those. And then at the very end, if I got all of those are in check, if the trade confirms, take the trade without fear. What would Axe do? I don't know if you guys watch that show, Billions, but Axe is Bobby Axelrod.
I do. Great.
Yeah. Awesome trader, right? Even though he was doing stocks and a little bit dirty stuff. But anyway, the point is his fun was, take the little bit out of there. Like his demeanor towards it all was great. So I always enjoyed that. And I would literally have to sign the paper, right, and date it because I'm responsible for this trade, right? Like I'm personally responsible for it. I checked off on this. I signed off of it. And, I put my experience on the line when it comes to was that a good trade or not. So this looks like a lot, which in essence it kind of is, but a lot of it is just, basic stuff. And then again, I got those pro tips on here, but yeah, I saw yours and I'm like, let me pull mine up and
it's really insightful. And I think you're not making a note of the things which you've obviously done as a human to mess up. You're going to keep making them.
Oh, here we go.
You got alert. Let's go.
My bad. Yep, here we go. See, and this is once again, this is the importance of having those alerts up, right? This thing is about to confirm here shortly. So let's see what we got.
Yeah, let's do it. Bring it back up.
Back to EG.
Yep.
15-minute chart. Let's see. Okay, see, we got some action here, y'all. We got some action here. This thing closes in 2 minutes. I am about to enter this trade going long. Right? Let's see here. Yep, everything else is here. Everything. So let's get a good look at this one. Right, and we'll just monitor this as it goes. See, the work is already done. I've already put in all the work. There's not even anything else to do. My entry candle, as I mentioned, is just close above the 13, which it looks like it's going to do now. I would love it to close up here above this yesterday's high, right? But if it doesn't, it's totally fine. I still just need to close above this 13 EMA here. And it can't be an ugly candle now. It can't be more. Yeah. See, like how it's starting to come down, it can't be more wick than candle. That I will not enter on.
Well, let's keep it on. Let's watch it. This is live trading after all. Let's watch it. Let's see what happens.
Yep, we're definitely about to. So this is a nice, easy 10-pip stop. And I'm going to execute this here. Oops, come on.
The tension.
Yeah, I've got to get my position on right. Okay, cool. Trade in. Sweet. All right, as soon as this closes, we are in this trade, guys. 30 seconds. This is my favorite part. Like, you get to see, like, all the work that you do into it. And then another cool thing is, too, is, like, once you know you've done everything, I've done my part. Now, once I enter the trade, there's nothing else I can do. Right? I'm just managing it from there.
Yeah, but you know exactly what to do, regardless of what happens, and then that's the point.
100%. And here it is, right here. Get this candle closed. Boom. I'm in
Yeah.
Euro GBP long, and my stop loss is 10 pips. So I'm in at, my stop is at 07, so 84.07.
Right.
And we can just watch this bad boy. 84.07.
Yeah, we definitely. I think we need to finish with this in 45 minutes and see where we're at, because that's, this is the whole point of what we're doing. So this is great.
Right. 84. Let's put it at 84.50. 84.50. So my TP is at 84.50. Sweet. That's it. That's all. Now we just let the market play out, do its little thing. And yeah. Right.
Fantastic.
Beautiful trade. And as I always mention, right, when I do the markup, right, I'm looking for this pattern, right?
Yeah.
To retest this.
Yeah.
Right. This is the only thing that I'm taking a look at, right?
Yeah.
After the W, that very first bounce, right? We literally just took this trade right here, right?
Yeah.
This is the move. This is the move. This is the move. This is the move. Right? We got this. Let me zoom it out a little bit. Again, we got this 5,200 cross. We got this W structure here, right? You see it just ran up, bounced, and going long. This is the move we're looking for right here.
Yeah.
Same exact thing. These are the same exact things.
Yeah. Well,
Damn.
so for you, what are your time expectations for this trade?
To be honest, this could do whatever it wants, but no matter what, I would be. Let me delete all of this. I would just be. Yeah, it could literally take for the rest of the day, but no matter what, I would close this at 355 because I don't hold my trades to the next session. I don't want to pay swap. I don't want to get gapped up. I'm just monitoring it. Now, as it goes further and further in profit, right? Like say once it get to about this level here, right? Once it gets here, I like to make these a certain color.
Yeah.
Once it gets there, I would definitely be moving my stops to break even, right? I would just always put SL to BE. Stop loss to break even is what I always put here.
Yeah.
Right. So once that gets there, I'm literally gonna take my risk off the table for one. Maybe depending on how large these candles are. This is the only part of my strategy that's discretion. I would say is if you want to take off a quarter or if you want to take off a half, that's totally up to you. Depending on how large the candles are, depends on how much I would take off. Now, if there's a bunch of smaller candles, I'll probably take off half of it, right? But if there's some larger candles and it's just moving, let's say if we hit this price in one or two candles, oh, I'm definitely going to take off like only a quarter and let the rest of it go.
Yeah. Yeah. Constant negotiation, protect your capital always. Yeah. Well, let's shall we have a look at what Bitcoin's doing while that trade is hopefully playing out?
Yeah, absolutely.
Let's
glad we got to kick that off.
Yeah, we'll check in with that at the end. I think that's fantastic.
Yeah.
Right. Okay. Bitcoin. Let's start. Okay. So picking up from just find the right chart. So okay, yeah. This is Bitcoin 4-hour chart. And as I was saying yesterday, you want to be trying to, I have multiple Bitcoin charts, and I always tend to do a fresh one every day because there's obviously a new perspective, there's new things to look at and new trading opportunities. And the charts we were looking at yesterday may have kind of invalidated in terms of their usefulness. So fresh charts are quite important. Now, this obviously is previous all-time highs. This is kind of long-term support. This is kind of the 73 to 70K range. This is where we expect a reversal. And we've come down to this range and we have this possible descending triangle. And this is the support line at the moment to hold. So obviously we could say that you know, a break to the upside out of this pattern would be something you could trade off. But as you can see, there is a wall of resistance. We have this, the moving average on the 4 hour coming in. And if I add on the moving average from the 1 day, you'll see we've also got it coming up across, acting as resistance. So there's really only one direction at the moment, and it's coming back down to this area. I mean, do you see things any different, Mike?
No, for sure. That would be pretty much the next step in the cycle for me, right?
Yeah.
It's to come back to that area.
Try and quantify crypto at your peril, but yeah, absolutely. So this moving average, the problem is, so if this moving average, I was talking about this today with some students, if this moving average was really hugging this diagonal trend line, then there's more chance of a bullish breakout, because you've got one strong resistance line in the sand if this moving average was exactly with this. And then if we did get a candle body close above it, we've then turned 2 strong resistance levels into 2 strong support levels. But right now, any breakout of this level has to ascend past the 1 day, 200 MA. It has to then, it'll immediately encounter resistance from the 4 hour, meaning, you know, even if you can get over the 1 day and the point of control and the diagonal trend line, you're going to be like, yay, oh no.
Yeah.
So you have to, you know, obviously, as we all do, we're working through the potential scenarios. And obviously because there's so many different market caps and different tokens, and they move in different ways. I don't necessarily have a strict system like you do, which serves you so well and is so well thought out. So I have to look at it as a constant daily negotiation from what I'm seeing. So for me, the first possible, well, for you traders listening, the first possible entry for a long is going to be down here, because you're going to want to get this moving average to come down and with like a pincer move of sorts. So it maybe does start to hug this. And then when we do get a breakout, this moving average is kind of right here, and then we can range and then maybe work our way up. But right now it's, you know, we've got a lot of selling pressure and because of all the resistance. So let's just see though, because this is long-term support. Do we have any buyers looking to come in here? So I'll just switch to the hourly chart. Yeah, so this is an order block. Nothing to trade off just by itself, but there are other buyers looking to come in at this level. So there is a little bit of confluence there. Now, of course, we want to switch to another chart and see if we can get the same answer, which is, you know, is 78K a good place to maybe start entering for a long? So let's turn our attention to the 30-minute. Now, this is obviously giving us a more macro perspective, and we've had this reversal pattern, which is kind of a triple top, really, but it's mainly this wick is messing it up. But we've had the breakdown of what is essentially the neckline. So a double top is formed with these 2 peaks, and then the break lower is the neckline. And if it breaks below it, that's obviously got a bearish bias, and we're doing a kind of bearish retest of the 618. And because the 0.5 and 0.618 fib levels, just from this small move, are so significant, this is quite a bearish signal to bearishly retest the 618. So where is our 79? Oh, it's down here. Ah, interesting. It does line up. So we do have confluence in terms of where this is going. So this is telling us not to enter now. I mean, it's maybe a short opportunity but this is just a 30-minute chart, right? So there is a short opportunity. You could be looking to enter here because there's a nice, like a little short trade, because there is a nice little pocket here, because we've got obviously an order block, we've got the moving average, we've got the point of control, and we've already had confirmation of a rejection. So you could be looking to try and, if you just get like a candle coming up, that would be your entrance, or maybe coming up to, ideally you want this, right? And then you want to try and get in around here, right? But
right, agreed.
Because otherwise, I don't want to say it, but you're in the middle of nowhere.
Right.
So there's definitely a very simple short trade here, but you want this entrance, because as we were always talking about, if if we do get a reversal and we do get a breakout here, the price action is definitely going to retest this level, which gives you a lot of flexibility in terms of, you know, breaking even and getting out. But for long positions, we've established that, you know, this is the line 79 to watch on multiple time frames, and is here. And then obviously when you enter here, you're at the bottom of a range, so it's naturally a good entry point. You've also then got, you know, you're on a low volume node, and then if it does break down, because you're so close to long-term support, you're definitely going to get a bit of pushback, right? Which means, you know, you've got a lot of negotiation. We're not talking about stop losses right now, but we're just talking about the general price action, because with crypto, the way risk management, part of the incorporation into your approach to risk management has to be to try and use the volatility, which you don't necessarily see in other markets, to your advantage, because it's not necessarily to have such a tight stop in these scenarios, because if you do, you're going to get these wicks, which are going to cause you problems. So if you know that this is a significant support level, and you know that there's buyers which can catapult the price action back up below it, you can kind of incorporate that this bearish retest, so you can get out at no loss, is integral to your risk management strategy. Because you put a stop loss here, it's going to get hit no matter what, right? Even if we go down and bounce, we're going to get wicks. So it's no help to you. So your stop loss needs to be a bit further away, and then just use these buyers to help you get out. So it's a manageable entrance. But because of the way the market is at the moment, and this is only the 4-hour chart, so it's not like the daily or anything. We're still, you know, this is the daily 200 MA is giving us that insight. And we're obviously, as you established, you know, we've got a bearish slant now if we're below this moving average. And we want to cross. We want these things to cross. But if you're looking to get, you know, to assess whether this is the right, again, another point of confluence for a bullish long trade here, you can do this, and you can just quickly set up a multi-time frame chart in TradingView to have a quick at a glance sense of what things are doing. So this is the 30, 1, 2 hour, 4 hour, 6 hour, 8 hour, 12 hour daily. Now on the daily, we've had some divergence, which I've put on here, which we can see. So, you know, if you look at the previous divergence, it only led to this kind of move. So it's not necessarily good, the best signal. But if we have it on the 12 hour, and then we get to see it on the 8 hour and the 6 hour, which we do just here, that is giving us some additional confluence. But so 30-minute, we've got divergence. 1 hour, we've invalidated the divergence. We've got more coming in on the 2 hour. But when I'm looking, this is what I'm looking at right now. These two things aren't quite where I want them. And I'm looking at the RSI. These are oversold just about. You know, these are in a pretty good place, you know, the 40-45 range for a bounce, but these are not. These are coming down into the lower range of the RSI, which is telling us that we really have got a little bit of movement to go before we bottom, because these two time frames have some ways to go, as does the 12 hour. And these aren't crazily oversold. We're not like below 20, we're barely below 30. So there's clearly a lot of room to come down. And then we go back to this chart and we're like, well, here's the room we need to get oversold conditions across more time frames. And as we've established, you know, this is the area we're looking for. So we've had a good gander at the whole market. It's telling us there's probably more room to come on multiple charts, and this is the level to watch. So you could scale, you could try and just capture this single move like this and then take your profits here, right? Really straightforward, little scalp trade. Or if you're thinking of more of a long-term position, you can start scaling in 25% here, 25% here, right into this long-term support line, 25% here, and then just essentially try and scoop it up like this for a more long-term position. But you have to know, where do you start scaling in? Where is a reversal most likely to occur? And it's probably this point onwards as we go down. And this is the negotiation, because some people, if we take off these moving averages and I take off the order blocks, and what people, and I'll take off the fixed range volume profile just for a minute, just delete that. People will just see this diagonal trend line, and they'll just try and buy the breakout, right? They'll just try and do it, and they're not seeing the whole picture. And it's so important to, Jannie's very good at this, our other great trading coach. He's very good at looking at these multiple time frames, and
really, he does a very good job at it.
Yeah, and he relies on this a lot, and we should all rely on it more, certainly in the crypto space. So this has told me everything I need to know. We're getting there, we're nearly there, and then we've looked at 2 different charts, and this is how we've determined this level. It doesn't mean it's not going to continue down if somebody tweets something, like Bitcoin's been hacked, run for the hills, then of course, it's going down. But here's the interesting thing. I mean, sorry, do you want to jump in here and just put your insight onto it, maybe?
Yeah. So it's so funny how close things correlate, right? Because when I look at this, the exact same thing. If it were closer, your bias would be, in essence, would be wrong, right? You have to zoom out to even really understand the bigger picture, right? It's kind of like that, I guess, that old adage of, hey, if you're too close to the trees, you kind of can't tell that you're actually in the forest. Like you need to step back a little bit.
Yeah.
So yeah, and especially on that the last chart that you showed, where it would need to, in essence, jump back a bit and like kind of pull back for you to get a good entry, not just buy the breakout. Yeah, this part right here. Yeah, you can't don't just short that because it broke out of the range. It's not good enough.
Yeah, and you've got to look. You've got to look at everything. If there's ambiguity, you've got to see where the bias is. And just, I mean, when I just added that moving average, it just makes everything so much clearer. It's like, I'm not quite sure what I'm doing. Yeah, it's a short, right?
Exactly. And it's just one of those things where, you just have to do it this way. There is no shortcuts. There's no cutting edges or anything like that. You have to run it just like this. Otherwise, you can learn the lesson on your own, take all of those losses, take that pain, and then circle on back when you got your mind right.
Yeah, but this is the interesting thing, right, about what's happened, right? So this is quite a bit of a move, right? And do you remember, when there was like a couple of ridiculous, like the biggest liquidation in crypto history a few weeks back, when we had a move when we were at the top? I think it was, let me find another chart. It was, there's like a move from
like 100K to like 80K, lost 20,000, like 20%.
Yeah,
over like a week.
But the whole market went with it, and that's what made it like a trillions of liquidation or something. So I don't know what it was. That's obviously just a joke, but it was a lot. But when that happened, the whole market tanked. And if we go to the money flow, if I can find it, so this is Bitcoin dominance. These are the sort of moves we got from that kind of movement, right? Which just destroys the altcoins. It just this is a sort of move which happened. I think this is it. This is the one in February, right? This is money exiting the altcoin market, right? And it just decimated everything. But then we had a crash. We had this crash a bit later, which was even greater in terms of percentage decline. And Bitcoin dominance didn't really blink, right? And right now, what we've had a downwards move from Bitcoin. We're in a lower range, but look, this is the money flow. It's now moving into a macro downtrend, which is good for altcoins, right? And even though we still haven't broken this long 2-year trend, which we're just waiting to happen. This is the previous altcoin bull run from the last. That's what we're waiting for. The interesting thing is that even though we've had this sell-off today, because we're approaching long-term buy support, right? People are starting to enter the market, and this is reflective of that. It's very hesitant, but it's reflective, because typically, if that move, we had a move pretty much the same size back in February, but this is what happened. So context is important, because this move occurred when Bitcoin was at all-time highs. It was really high. So what comes up must come down. It's just basic mechanics, and that spooked everybody. But now, because the market is approaching long-term support buy zone as a result of a move, the market's not reacting too badly to it. And the altcoins are actually starting to find their foot again. And this is the interesting negotiation between Bitcoin and the rest of the market. So if you look at Litecoin, right? So, you know, this is today, this is the 17th, right? And this is a move. That is a sell-off. This is just a, you know, I'm coming down a bit. That's it, right? So there's a distinct difference now, which should be telling people that maybe we're going to have some recovery. And if I just show you this, right? This is what a Bitcoin dominance cheat sheet. Can you see that okay?
Yeah, that's just nice. That's super cool. You put this together?
No, I stole it.
Oh. Okay.
No, I stole it. This is my mentors, and I should be one of those people who says, yes, it was all my idea.
Yeah, this is awesome.
So this is where we are today, right? We have got Bitcoin dominance, essentially in a macro downtrend, but we also have Bitcoin going down. Now that just equals alts moving sideways or bleeding slowly, right? This is it. And what happened in February when we had all those liquidations, it was because Bitcoin dominance was going up whilst Bitcoin was going down. And that is what wrecked the entire market. That combination, that's what caused all of those problems. That's what caused this in the money flow. So looking at the weather today, it's not the best case scenario, which is Bitcoin going up and Bitcoin dominance trending down, but it's not the worst. And this is the negotiation, because whatever you do, whatever trade you plan on whatever altcoin, it makes no difference if you ignore the money flow, because like with this pattern here, this is a bear pennant, right? And it's falling very quickly, right? It's a classic kind of sell signal break lower. But because Bitcoin, right, started doing something bullish and it poked its head above the 1 day for the first time in weeks, this whole bearish pattern just invalidated, because Bitcoin says, no, we're going to be a bit more bullish today, right? So this is what people who are thinking of trading crypto needs to be paying attention to, these combinations. And when we said at the start that it's easier to trade short in the crypto market, it's because if you think about it, there's only one scenario where we get tremendous consistent altcoin movement, right? There is 3 scenarios where they're not moving, they're bleeding, or they're crashing, which is easy for short trades, right?
Yeah, that's true.
And so this is what's happening at the moment is good, because we're selling off, but we're approaching where we want to buy. And if we look at these, this is it. You see, when you've got a crash up here, people are going to sell their positions in altcoins, because there's no way we're going up, we're coming down. So they're not going to invest here. But when we start approaching these areas, they'll start looking to come in. And that is why Bitcoin dominance is doing something really in favor of the altcoins at the moment, just subtly. And this is the negotiation which we need to have in crypto, and it gives you the edge. Essentially, it's not foolproof, but it gives you the edge. And this is the chart we were looking at yesterday, right? This is what we want. This is what we want. This is what we're waiting for. And you can see, if you zoom in, right, we've got a bit of a recovery happening.
Yeah.
That's the game. Any thoughts on that?
When I tell you, like, that is the exact play, like, I will be interested in, because as I always mention, that looks just like my cycle, right? Like, you got that run up and you got the first pullback to that area, right? Yeah. Now, I can still see it pretty clear without all of the EMAs on here, but it's the very first time that price has come back to the area, because before it never messed around in there at all, right?
Yeah.
But now at this point, you would be all over it. Like, and then you got the second leg right now, right? So you got that first little leg, that W looking structure. Once that closes above like this little like support area, like you said, the zone retest or the zone flip, I'll be all over this.
Yeah, and this
that would be the entry.
Yeah, and it's like you'll have traders, right? If you're a beginner trader, don't try and buy the bottom of this pattern because you haven't had bullish confirmation. Don't try and buy this, right? Wait for this. This is your change of character in the price action you're waiting for, right? Then you know that this process probably isn't going to be smooth, so you've going to have another entrance point. But buying at this level here isn't necessarily going to serve you well, right? Because you haven't had the confirmation you need. You're still in this pattern, right? But buying the same price level here after you've had this signal is the probabilities are now in your favor that we're going to continue up. That's the game.
Look at that little wick, like right to the left, that wick below that little area, retest that whole area as well. Yeah. Beautiful.
Classic liquidity grab, right? Here we go, bullish signal. Let's get the lowest prices, and now and so we've got something we can trade off. Now, this is obviously an index, so we're not trading the index, but this is representative of what altcoins are doing. And if we look at Ethereum, right, same situation, right? We have this, we're in a pretty bad, we're in this bearish situation below this long-term primary trend line, right? But what will happen is if you see this break above, right, you're probably going to see a lot of altcoins which are stuck in these kind of negative positions suddenly start to recover. And obviously for Ethereum, you're not entering here. You're trying to wait for this, right? Maybe, as we said, something like that, right? And then away we go. But what is about to come next, you can kind of see when you look at the market. But this is obviously slow motion trading, right?
Yeah. So, huge. That's a great area to be in, like absolute great area.
Yeah. And I mean, but this is the problem. This represents, this is USDT dominance. This represents, where people's money is, right? And right now, since January, there's more money exiting. There's more money just keeping in the stable coins and not actually trading, not actually being in the market for a while. So we've got to see this coming down, which is another indices you can use to kind of gauge. So if we see USDT dominance do this, it's bear time again, right? It's bear time, right? But if it does this, you're like, oh, you know what? The trend's changing. Just like with Bitcoin dominance, it's slowly changing. Because if you zoom in a little bit, you can see, a weakening trend. We've had this breakout. Now we've come back down. We're struggling to get back out again. So this is potentially going to break down. And then when it does, and you use lines in the sand, you can use the trade-off. You can say, we talk about structure. You can say, and planning. You can say, right, I want to invest in Ethereum for the long term. But before I do, I obviously need Ethereum to recover, obviously, right? But I also need to see this break. I need this to break, right? Because then I've got the market. And this is a level deeper than just staring at an order block detector on your chart, right? And you sync that up with Bitcoin dominance. As we said, like with Bitcoin dominance, we've got this, hey, lordy. I can't find it. Dearie me, very disorganized as always. The long-term time frame for Bitcoin. Oh, where is it? Oh my God, where is it? Come on. I can't find it. But you look at Bitcoin dominance and then you wait for that signal, and then you've got three different signals, right? From the money flow. You've got it from specifically looking at the total index in terms of just the altcoins and not worrying about Bitcoin. And then you've got an insight into what people are actually doing with their money. What are they doing? Are they sitting on the sidelines, or are they going to put it into the market? And assessing all of these will allow you to enter at the right time, almost ignorant to the TA of the token or coin you're trying to invest in. This is essentially the game in crypto. It's essentially it's everything you've been saying, but the issue is that because there's so many different scenarios, difficult to have necessarily specific plans for each scenario, right? You have people which might trade a falling wedge. I mean, this is a falling, a descending wedge of some kind. You'll have people who will It's not a great one, to be honest. It's just too narrow. But you'd have people which, you know, will look at something like this, right? That's so janky. This is not property, not property A, right? So, you know, you'll have people looking for divergence at this level, and their only strategy is to wait for, you know, this wedge to come together, to pincer, and then wait for divergence, and then they'll front run it, and then away we go. And that's a strategy which works quite well in crypto. But you have to have these kind of mini micro strategies, and then everything else has to be a bit more broad. And what is the weather? What do I need today? What
exactly.
type of so yeah, that's me really for today. This is Bitcoin.
No, that's great. That's great. And I agree with a lot of your points, right? Like knowing what I know and using my TA expertise, this is exactly what I would be looking for in essence, right? Isn't just, oh, you know, buy Bitcoin. Like, well, did you look at the chart? What chart?
What is a chart?
Yeah, what chart? Like, oh,
I don't even know what Bitcoin is, but it sounds good.
Yeah, so things like that. But yeah, just adding to, you know, to what I would put to it for sure. I'll be looking at those same levels, those same type of patterns, same prices. A lot of it will be spot on.
Yeah. How's your trade doing?
This thing is slightly down. It's kind of just sitting here. Let me share it. One thing I didn't go over was the exit strategy.
Yeah,
right?
we got time. Let's do it.
Yeah, getting in it is just half the battle, right? Just half of it.
Yeah.
So for me, two things would need to happen. Like this is regular. So far, they're kind of pulling off of this level. We cannot tell which way they're really going to go. It's a little bit indecisive here. But for me to close this trade, for one, obviously this could come all the way down here and just stop me out and I'm done. Like that's the end of the trade.
I'm not sure I've got your chart yet, my friend. Oh, it's coming. It's gone. I got it now. It's coming. Got it.
Oh, okay.
Thanks. Yeah.
Cool. So obviously, let me zoom out just a bit. Yeah, price could obviously come right down here and just boom, 1, 2 candles, stop me out. And that's it. Now, one cool thing about the way this, like my setup is I do get stopped out, don't get me wrong, but it's not that often for the simple fact that a lot of the times I would have closed the trade before. So I need two things to happen. One would be how I was waiting for an entry candle, which would close above the 13 to take this trade that we jumped in, right? And then simultaneously, I don't think I mentioned this, but I'm also looking at my TDI down here, right? I want to see the RSI line, which is this purple one. I wanted to see it cross the red one, right? So both of them need to happen for me to take the trade in essence. So my TDI and my chart always need to agree with each other. Same thing for my exit, right? Once this candle closes, if one of these candles closes below, like back below the 13, and simultaneously how we're looking at the RSI line now, this purple one, how it's above the red one. If this closes back below it and goes back below, and again, in addition to price closing below this 13 EMA here, I would get out of the trade.
Yeah, you're
right. So let's say that did happen, and let's say it closed down here, right?
Yeah.
Whoops, let me change this to red. Let's say that this price, the candle closed all the way down here. More than likely, if the candle closed down here, obviously it's below the 13. So that's one check to close it. And simultaneously, the RSI line is so close to the signal line at this point already that if price closed all the way down here, then yeah, this would cross too. I would get out the trade like automatically. I wouldn't hold on to it any longer, because part of my management strategy, right? Because you got an entry, you got the exit, you got the management part of it, right? You still have to manage the trade when you're in it. If price is below the 13 or above, it kind of stays on that side, right? So I don't want to stay in this trade going long if price is below the 13. That's just like a no-no, right? So in essence, I'm just sitting here waiting. This could hang around all day until 355. As long as it doesn't close below the 13 and the RSI line doesn't cross back below the static, I'm still going to be in this trade. I'm just holding it. But as soon as one of those happen, I'm out of it. And then again, as I mentioned, if price gets to this level here, I'll go ahead and move my stop to break even and typically take off. In this case, a half, because the candles are already kind of funny. Like I would expect this to have kind of ran up already, and it's kind of not doing that.
Yeah,
right.
Happens.
So in a scenario like that, it's just a big no-no.
Yeah, I think this. I mean, it's not what we were talking about earlier, right? A lot of trading coverage, certainly in crypto, is 100% success rate. I'm the winner. And it's like, I've done YouTubing, and it's so easy to just fudge the numbers and like you cherry pick your successes, and that's part of it, obviously, right? That's just part of being a salesman. But when you're teaching someone to trade, you can't be like that, because they'll just give up. They have to see me and you, everybody else, people with experience and have traded these markets for a while. They see, like, we make mistakes, right? There is trades which don't go our way, and
for sure,
we're managing it. And the reason why I mention this is because if you have a mentality that you can't, you mustn't lose, you mustn't make a mistake, or you mustn't have a trade which goes wrong, that will end up making the whole situation and your approach to the market worse, because you'll be frantically trying to get those yacht money trades, right? every day, and it's not going to happen, right? It is a grind. It's a daily grind, compounding profits, scrapping away. I mean, that's how we mine gold, right?
100%. It will never, ever, ever be that type of thing. I mean, these super big 8-figure traders, I mean, guys, these dudes lose 200, 300K in a day sometimes, right? In one session. Before we have breakfast, they're down 300K. So the average person, they're like, I could never do that. And that may be true. That just means you would never be at their level as well. Because to earn big, you gotta risk big, right? And not necessarily risk the wrong way big, but you have to accept that this is a very dynamic market and we're creating structure, right? You got to accept the fact that, hey, this might lose. Even this trade that we're talking about right now, there's no surefire way that this is going to win. This could totally lose. In fact, if it does lose, I still wouldn't be surprised, because I lose trades. That's just how it happens. But what I am confident in is by the time I'm taking these trades at the end of the week, the end of the month, the end of the quarter, end of the year, that I'll be up. That's what I can guarantee based off my experience, my data that I've entered in, that we talked about earlier, guys, that you gotta make sure you're journaling these trades. And then it just touches on the psychology part of it too, right? Like this little part doesn't really matter, right? Like if you're looking at an equity curve, right? Let's say an equity curve is going like this, right? Let's say you started out here and it's like boom, 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 right? Boom, right? Like that's a nice equity curve. I would take that equity curve any day, right? But at the same time, you still gotta realize this was a loss. This was a loss.
Yeah.
Right? This was a loss. These downs are losses.
Yeah.
Right? This is a loss. This doesn't matter in the grand scheme of things. And then if you think it does, this is that scenario where you're standing too close to the tree once again. You can't even see what's really happening. You're zoomed in too close. Right? You think this is bad, and it's really not. Like this is just part of it. Like Mark Douglas says, you got to learn how to think in probabilities, right? Like I know I have edge right now. For me to enter this trade, my edge has presented itself. And what am I going to do? I'm going to exploit it with proper risk management. That's my job as a trader every single day.
Yeah, and it's also, you have to, obviously different markets have different dynamics, and I come from a very, the wild west of trading. It's you know, it's everything's always changing. There's always, and we talked about with the Bitcoin dominance cheat sheet, where we identified that there's only really one scenario where you get that yacht money, and you need to, in whatever market you're trading, you need to know when to go big, right, and when not to. And most of the time is not. Most of the time, right? And it's like, you know, don't wait for Bitcoin to break all-time highs. Plant your seeds before anyone's talking about it. It's this approach, right? Have an understanding of what your market you're trading, and just by understanding these things, right? You know, like knowing what do you want, like what do you need for this trading pair in Forex? What do you need to see from these countries, from this economy, right, for the support level to go bigger, right? And then that's the decision-making progress, not, you know what, I'm getting into trading today, I'm going to make sure I have my yacht by 5 p.m., right? What? Like, I mean, you haven't even got the thing to tow it yet, right?
Yes. That's when I see stuff like that. That was like, oh, a yacht's coming, but it ain't finna be yours. It's about to be another trader's yacht.
You just gave someone a yacht.
Yes. Like that's realistically speaking, that's not how it works. And I think, honestly speaking, the sooner traders like really can grasp that and wrap their mind around that fact of like, this is a slow grind. Like it really, really, really is, right? Like I am no stranger and not shy at all to tell people, hey, guess what, guys? Not to brag, but I actually live that pretty dope trader lifestyle, right? Moved my family to Mexico. We live here full time. I don't do anything but trade, beach, food, good times. Like, yeah, that's definitely here. Not even to brag. That's what happens here, right? But that just happened. That just started happening over the last 3 years. We don't really talk about the 8-9 years that I was, oh my God, I can't believe this happened again. Heartbreaking, heartbroke, you know, tears, thinking about, man, I got to get me another job again. Like blew my account. I'm like, this keeps happening. We don't really, you know, you forget that part happened, right, to get you here. But there's no way in the world that I don't execute my strategy, my process, book by book, play by play, robot methodically the way I do now without that happening first, right?
Yeah.
That's the only thing that got me here, because I was such a good loser, probably one of the best losers ever that you've ever seen. Like I can't believe this guy keeps getting back up. He's crazy. He's absolutely crazy. He keeps getting back up. Just stay down, you know. But after a while, you just develop this, not just thick skin, but this process, and you learn what works. You learn what doesn't work. You know when you should step to the side, and you slowly refine and you build this, you know, nice arena of, okay, I know I'm good in this little space right here. This is my sweet spot right here. And as long as I can stick to that, you'll be good to go, right? Versus I went against the grain before, and that's when all the sleepless nights were happening, right? So.
No, absolutely. But the thing is, the greater point, I think, is that, I mean, I think I'll use this metaphor maybe to end, and it's, so there's this guy, he's got a pickaxe, and he believes that there's a diamond, there's loads of diamonds in that rock face. And he's about 22, and he starts hacking away, and he hacks and he hacks and he hacks. It's his daily life. That's all he does. He just keeps going. Fast forward, he's 60. He can't do it anymore, right? He's committed his whole life to it, right? And then his son takes over, right? But his son's like, so he gets to 30, and I'm like, I've been doing this for 10 years now. My dad did it for 60 years, and I'm like, there's nothing here. So he drops his pickaxe and he goes and does something else. Then another guy comes along, picks up his pickaxe, takes one chop, and a diamond falls out. Right? Stick with it. The only way you lose is by giving up. Literally.
And all traders have gone through the same thing, right? Like we've all thought about giving up, saying, you know what, maybe I'm not cut out for this. But the thing is, the main thing, and we'll literally close it out from here, is you have to learn from the mistakes, right? To continue to move forward. Because if you don't, now you're just spinning your wheels in the same place, right? So if you're here taking trades and you're not journaling or you're not, immersing yourself into the entire process, then yeah, it probably won't work for you, to be totally honest. You got to learn from these mistakes, because we call them L's, but they're not. For some people, they're losses. For someone like me, they're lessons, right? I learned another lesson today. That's awesome. I got a conglomerate of lessons.
Yeah, it's like you just, I'm a musician, right? And I was playing instruments since I was 3 years old, right? But let's take violinist as an example, right? For the first 3 or 4 years, whatever you do, it sounds terrible, right?
Yes.
And you have to put in the time until you get that sound, until you get those profits. So
right,
that's the lesson, I suppose.
Right. Well, always good. Always a pleasure here with these sessions with you, Paul, for sure.
Yeah, fantastic. Really great insights. Great talking to you. And well, enjoy the rest of your day.
You as well. All right, guys. If you got any questions, let us know. We'll catch you on the next one.
Catch you later.
All right.
Hello, everyone. Hello, Howard.
Hello, Sam. How are you doing? Everybody, how are you? Hope everybody's good.
Yeah, I'm good, thank you. I'm good, thank you. How's your day been so far?
A little bit, I think, frustrating. I would say early on. I bought what appeared to be an upside breakout. Well, just before the upside breakout, I anticipated it in sterling and euro against the dollar. Made a little bit on the upside on the euro, but on the pound gave a little bit back. So a little bit kind of, I think it ended up very slightly net down on that. But I've since re-entered because there's sometimes, I don't know if you get that in your markets quite a bit, but certainly in the currency, sometimes you get what I call a double trap, where you get a breakout in the morning and that fails, then you get a breakout the other side later, that fails, and then you get the real move into the close, which I think is happening on the currencies. So I don't know if you get that on the yeah.
We do.
But
yeah,
you'll know what I'm talking
actually,
about.
I love those setups because that's all I ever trade, the trap setups. So
Yeah,
the more traps, the more happy I am. But
yeah, yeah, it's a bit. It seems a bit sadistic, but it's just the nature of the beast, isn't it?
Exactly. I don't want anyone to lose money, but
No,
I mean, it's a zero-sum game, right? Someone
Yeah,
unfortunately has to lose for you to win. I mean, we can't all win, sadly.
no. I guess you can always kind of square it off and say, well, no one's losing on the other side of the trade. They're just longer term traders, so you can you can almost
There we
justify
go.
it to you.
Exactly. They're all swing traders. It's fine.
Yeah.
Well, viewers, I hope you're all having a great day. Let yourself be heard in the comments. Feel free to post comments, whichever platform you're viewing this on. If you go ahead, leave a comment, we will see it on our side. Hope everyone is doing well today. We are going to start kicking it off, I guess. So yeah, Howard, you said you were in a trade. Do you want to go ahead
let's
and
do it.
give the viewers a little look? Perfect.
Absolutely. Just 1 second. Let's just window and away we go. Okay, so basically 2 trades, one euro dollar, the other one sterling dollar cable. So I think the screen is you can see it there now. So essentially we had that kind of break up through yesterday's high in the early in the session in cable, and that kind of stalled and then had another go, topped out, and then we saw a flush through to the other side of the range. So that kind of was the bull trap, and that was stock driven selling. It made a new low, and then this is what brought the bears came in. So we had people stopping themselves out who were long, and maybe some new shorts coming in thinking that's the top, double top or whatever you want to call it. But no, a lot of demand coming in just below the previous session low, down, bounce, down, bounce, down, bounce, and we're starting to head higher. So as I say, that's my kind of move where you get a double trap. I like that one because usually it clears the path for the real directional move, and I think that's what we're kind of seeing into later in the session. So maybe we break the high and then we start to see quite an extension of this this move to new highs. I mean, the major trend is still very much up as far as the European currencies and now the commodity currencies are against the US dollar. So that's really how I traded that and how I see it. I'm going to be taking partial profits around the high, move the stop up, and then I've got targets that come in a lot higher should we get the acceleration higher. And obviously it's a day trade, so I'll be banking everything by the end of the day anyway. So let's see what happens with that. Very similar picture on euro dollar because they seem to be doing the same kind of thing today. We have the early break through the high, which saw the run up, topped out 109.54, stalled, and then back down through the high, and then stop driven selling here, breaks through the previous session low. So again, as with cable, sterling dollar, people stopping themselves out if they're long, maybe some new shorts coming in, but again, demand, 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 and now we're starting to move higher, almost drifting higher on of its own weight, or whatever the term is, just gliding higher, because it wants to go up. I think it wants to go up. And again, should we break the earlier high, then I think there'll be people who sold into it will having their stops above this high. And again, that can start to see the acceleration which I'm looking for, up to 110 or whatever it might be. So yeah, that seems to be the main action for me on the currency markets. The backdrop of euro dollar. I think people by now know that I use Elliott wave quite a bit, and for me, what I like to identify is an ABC move against the trend. ABC moves are basically 3 wave moves. So if you can't divide a move into 5 clear waves, then it's most likely to be a correction, and that gives you a clue as to which way the market really wants to go. So identifying this kind of ABC here, it kind of told me that we should be making new highs for the move, and it does look to be quite strong. So yeah, that's really kind of the story of my day in terms of how the currencies are good. Yep.
Especially that.
Yeah. Do you have any thoughts on that?
Yeah, the stop hunt you saw earlier today, as the market moved down, cleared out all those stops, and then pushed up. I mean, that's always a good indicator that they're probably going to go up a bit, aren't they? So yeah, no, I completely agree with what you're saying. It was, I mean, I'll be honest, I haven't even looked at the charts today. I've been absolutely swamped. So sadly, I haven't done any trades. I haven't had a chance to actually trade or look at the charts really. But I just had a quick glance now, and yeah, I mean, again, I think until FOMC comes out tomorrow, it's going to be a bit, I wouldn't say boring, but it's just going to be a bit indecisive, you know?
Yeah, maybe people won't be really loading up now, because thinking that it could be quite high risk going into the decision.
Yeah, no, I agree. But I'll have a look at what my charts are showing. So if I pop up my screen real quick, entire screen. All right. Let me know if it's up there. It should be.
Yeah, just coming through now.
Yep. Oh, there we go. That's perfect. So yeah, I haven't actually done anything since yesterday. We were on the same session, weren't we, Howard?
Yeah.
So I think yesterday we were literally approaching this area right here. And I mentioned how this would probably be the next. I mean, looking at it now, that's actually almost perfectly predicted. We did gap up massively. Yeah. That gap is huge. Not entirely sure why there was such a big gap, but okay. But yeah, we did retrace on this area here, came back to this gap in volume, and well, gapped up right to the top to this area where I thought there would be more of a short position. But sadly, I didn't have time to trade today. I've been absolutely swamped, and now we've broken.
Yeah, I remember I recall you were saying you're watching for that as a potential area of resistance to have a go at it.
Yeah, but let me look at the footprint. If I see like the perfect trade opportunity, I'm going to kick myself that I didn't make a bit of time today to trade. But
you can't be there all the time.
No, yeah, it was just one of those days. Sadly, I didn't have the time. All right, so this is the beginning. Where are we? So let's go to 1:30 UK time, which would be market open in America, 9:30. I'm guessing that's the candle. It is the candle. So, oh yeah, very nice little trap here. This is beautiful. Yeah, this is lovely, right? We got here just before the market opened. We had some heavy buying, and then we had more heavy buying right at the tip of that candle. And as we went down, they're all just leaving the market. You can see some people getting stopped out here as well.
Big one.
That would have been a beautiful entry right there. Oh yeah, and then the sellers coming in with a lot of aggression, and the market just pushed down nicely. Now I'm curious to see if the sellers are still in the market from earlier today. So if I calculate about 2,000, 3,000 contracts there, they left about 1,500, 2,000. So I'll say around here was a lot of heavy selling started coming in. And we got 1, 2, 3, 4, 5, 6, at least 6,000 contracts on the sell side of like bigger volume, 6, 7. And has anyone actually left? A few people left there. So we'll go back down to 6 roughly. Another 7. So I'm just calculating, are those sellers still in the market? And it looks like they would still be in the market. Yeah, there's still at least. I'm basically doing like a cumulative delta in my head, just like a rough count, to know how much sell pressure is still in the market. And it looks like they are still actually in the market, a lot of sellers. So, yeah, so I'm not until you see them get out, I don't think this market's really going to be pushing up.
Yeah, seems quite heavy.
But exactly. And considering the time of the day, I think we're probably going to see more of a consolidating market. But, you know, you can be wrong very easily. We're back down to the point. Oh, no, this was the point of control right now. I doubt it. Yeah. So back down to the point of control yesterday. So naturally, it's going to be a lot of transactions taking place here. So I think there's a lot of interest from both sides. But I don't see the buyers pushing it up today. They might do if the sellers get out, which they will eventually, obviously. Then we might get a bit of a push to upside, but it won't be anything spectacular. It'll just be a little drift up. But yeah, the main trade was gone. That was a lovely trade on the open. But yeah, you know,
you can't be there all the time. Yeah. Well, would you see the break of that point of control from yesterday, like a sell break thing, or that's not really your style?
No. So
like should we start to trade below it?
It can do. Like I like to use so yesterday's, like a previous day's point of control, like yesterday's one would be more of an area where I would look to take profit or something like that. If I was in a short position, I'll be looking to get out around this area because it's going to take a while. It might keep dropping down, but it will take. There'll be a bit of pushback and a bit of some
demand
sideways movement. Exactly. So generally speaking, unless you want to be stuck in that ranging market, you just kind of use that as a take profit level. But it's not something I would want to jump in because all it means is lots of buying and selling happened at that place yesterday. So it stands to reason that today, if we get there, there's going to be lots of buying and selling, and that generally means a sideways market. So like accumulation, right? Just a lot of back and forth and no real major direction. But if we do start trading below it, then absolutely. I would be looking still that the market will be a bit more bearish until we get back down to these kind of levels. Here, this would be like my next buy opportunity. This, not so much. That area, I don't know why I drew that out, to be honest. This area maybe a little bit, but really these kind of areas down here would be my next interesting areas for potentially buying the market. As for selling it,
it's definitely, as you said, definitely, as you said yesterday, a bit more two-way stuff coming in now, which makes it a bit more interesting.
Yeah, exactly. I can now look for, buying and selling opportunities. My next sell opportunity would be based on the gaps in volume. I can move that to the side a bit now. Would be either here, would be a nice little short position if we get there, or here even, which we almost got to. It's already tapped into it quite a while back. It tapped in and then pushed down again. So that was a good little short position you could have had. But yeah, all very high up around these areas, but unlikely. If we're already getting that high, I think the sellers are going to give up. And we'll probably see more of a buy market, a bull market again. But it would be nice if it got to here today. I would actually quite like to short the market. That area I would love to
Yeah.
short. Right here. That would be
Yeah.
nice.
It's quite
If
quite a breakdown. So could, as you say, could be you know, a good opportunity should you get the a weak rally.
yeah, exactly. A nice little retracement back to these kind of areas. See a bit of sell pressure come in on the footprint. I'll be happy to jump in. But apart from that, yeah, I mean, there was a great trade at the open. Really nice one, clear as day. You clearly see people getting trapped. And I wonder if, because this is the 15-minute chart, I wonder how it looks like on the 5-minute. Sometimes you can see it even better on the 5-minute. It really does depend. But if I switch down to the 5-minute footprint and go to 130. Oh, yeah. Oh, that's beautiful. Yeah. I mean, you can see it really clear as day on the 5-minute.
Oh,
Look at those.
oh, 142,
those,
142 up and down.
Yeah. Got 1,220 and then 1,420. Someone got trapped nicely right here.
Yeah.
The moment, and then you can, I mean, even the numbers 1,420 and 1,420 below as it broke, you could tell that's the same people getting out.
Yeah.
That would be your perfect entry for a short position. Your stops would obviously go just a bit above there.
Yeah.
It can sometimes come back and retest. And I would have targeted, naturally, I would have used the gap in volume area from yesterday. So I actually would have, we were just below, so I wouldn't use that one, but I would probably use that low there then as a target, or the point of control from yesterday. But
looks like
so
looks like that pullback ended just above the old high, didn't it? Where that small volume thing is. So it looks like there was a pullback, but the buyers did step in.
Yeah, absolutely. Yeah, that's that would have been a lovely trade, actually. Really nice trade. It's rare you get to see it that clear. It really is. I wouldn't say it's rare, but sometimes you have to use a bit more investigative. You know, kind of stare at it a bit more to kind of understand the story. There today, it was just clear as day, right in front of you, which is lovely.
Sometimes it smacks you in the face.
It does, yeah, absolutely. And there was never really any area that is, I mean, I probably would have gotten out around here, just because when I start seeing those bigger numbers coming in on the buy side, I would assume that would be sellers also taking profit. But actually, no, I'm wrong. I am absolutely wrong. That is not sellers taking profit. That's actually sellers getting out the market at a loss, believe it or not, because it's these sellers here got a little bit too cocky. They entered quite some heavy selling.
Yeah.
And then as it went against them, they got out the market just as it literally at the worst point. If they held a little bit more, they would have been all right, actually. But that probably would have made me get out as well, to be fair. Seeing other sellers rushing out the market, I would have been a bit worried and got out.
Yeah.
So it wouldn't have hit my take profit. Knowing me, I definitely would have got out a bit earlier. But still, yeah, no, it would have been a good trade regardless. Really nice. Zero drawdown pretty much. Never came back to your entry. It just flooded down, and that's what you love to see, you know. But yeah.
I guess when you see these ones, and you know, for whatever reason you miss them, you know, it happens. But it kind of proves the concept, and it just adds to the confidence, really. You know, when it comes next time, you'll be right on it.
Absolutely. So I would love to know why it gapped up so massively. I mean, that's a huge gap.
Is that the opening bell? Is that the pit? Is that the pit open, or is that the Asian session?
Literally, that's the Asian session. Yeah, that's literally
okay.
You know, I mean, we're talking an hour and a half, hour 15 minutes, hour and a half, or whatever it is, from market close to. I think it's literally an hour on. I mean, let's have a look. It closes at 9 and then opens an hour. It's only an hour and it gapped up that much.
Yeah. There weren't any results or anything overnight. No kind of earnings reports or anything that hit the market? I don't
May have,
know.
there may have been. I honestly didn't look. I mean, normally you get a gap like on weekends. That's understandable. You got 2 days of time,
Yeah.
you know, going by, but an hour and it gaps up that much. It's a bit weird. You don't really see that. I mean, if you go back, just go through the chart on, you don't see gaps like that from,
Yeah.
you know, one day, unless it's a weekend. You don't really see it. I mean, here was again Friday into Monday. All right, there was a bit of a gap, but that's very odd. You don't see that very often. So, not entirely sure. I'm not going to pretend to know why it happened and give false information. If I don't know, I just don't know. But it would be interesting to know why that happened. But yeah, I mean, whatever, it doesn't matter. I mean, obviously, I'm not going to be trading the market close, or the Asian session, so it doesn't really affect me. But
yeah,
interesting. And then it closed, and then naturally, I mean, to be fair, seeing a gap like that, you know, it will close the gap. There's a good chance it might close the gap. So generally, I think most people would have a bearish sentiment as well, seeing a gap like that. For the start of the day as well. And yeah, it never really, I mean, that was the high of the day pretty much. Where it opened was the high of the day. I think most people would agree that it probably thought that, it will just close the gap today. So, or fill the gap, or whatever the term is that traders use now. But yeah, no, really interesting. Let me, do we have any comments coming through? Anything? I'll just remove that. So how you entered which position? Sorry, did you enter? Was it pound US or euro US dollar? I forgot the
both. Yeah. I've taken a little bit. I've taken a little bit. It's just retested the high from the earlier in the session. Let me just put that up.
Yeah.
A second. I'll try not to exit the whole thing again. Here we go. That was fun. So this is cable sterling dollar. So so we're testing the high now. So banked profits on a third of the position basically. When I get a chance, I'll move the stop up a little bit. And just looking for the thing to continue, into the close. It seems that maybe if it can sort of settle above the earlier session highs, then we could see a nice extension of this squeeze. Euro dollar is a little higher. I don't think is it broken yet? It's close, but it hasn't actually taken the high out. So, but both of them are kind of heading up towards the earlier highs, because I think a lot of people who sold into this thing, they're on the wrong side of the market, and they know it at their cost. So that's the story of the day, I think, really for the currencies. Shall I go through the sterling yen and euro yen? I was going to talk about those today.
That would be interesting, actually. If you could.
Oh, cool. I mean, to be fair, there's not a whole. As I say, the action really is on the kind of sterling dollar and euro dollar in the short term stuff. But this is more kind of about longer term. We are struggling at an important level. This is the daily candle. So we've got this kind of long upper shadow developing today. The line I drew here basically comes from this peak over which a lot of people are trapped. So a lot of these buyers are trapped above that line. I think just above 164 on euro yen, and also that rally there stopped there, that rally stopped there, kind of thing. So it seems to be an important level that there are, for whatever reason, it rallies, but it kind of struggles there. And I think the reason is really because you've got a lot of people trapped above that level. And overall, I mean, not a lot to really sort of write home about. It's really kind of just stuck in a big range. But this could be an opportunity to maybe have a crack at it on the short side. Should over the next day or two we start to get some more bearish stuff on the shorter term charts. But directional bias wise, it's really stuck in a range. I think that ultimately it should break down purely because of the Elliott wave configuration. But I can be wrong on this thing, and I think if it does get up here above this C leg high, then that would start to look a lot more positive. But I've got a scenario in there whereby I think it's a range, and it's kind of sell the top of the range kind of thing for eventual breakdown. But I'm not massively confident on this one as I am on, say, the dollar against most of the other currencies. Sterling yen, it sort of does the same kind of thing as euro yen, generally speaking. Just one second, this sterling. Let's see what we've got there. Do a bit of a refresh. So yeah, when it comes through, a similar kind of thing where it's been in a range, and again today we're kind of struggling at the top end of the range. So again, it could be another one of those potential sales if and when it comes through. I think we're buffering at the moment, so
yeah,
not much.
It's a bit bad sometimes. It freezes a little bit. Not sure what's going on, but we'll work our way through it.
Yeah, do you want to? I'll try and get it all back, and then if you want to, I'll stop sharing and then
no worries.
I'll come back to that once.
I'll have a look at the pound as well.
Yeah.
See if our analysis line up.
Yeah, go for it, please. Yeah.
Okay, I hit share. All right, so I've just loaded up the pound futures. Now, I've never analyzed this chart in a long time, so I'm going to have to drop to a higher time frame to get a bit more perspective of what's going on.
Is it still March, or is it rolled to June? I don't know when the
this would be a
expiry is.
continuous contract.
Oh, okay.
I think these are, on TradingView, it's like it just rolls over, doesn't it? It's just a continuous.
Yeah.
Okay, got a bit of volume up. Okay, so we're in like a very heavy volume area from the past. So that's and I can see how it started consolidating for the last when was it? Beginning of March, basically. So for a while, oops, what did I do? Yeah, for a while it was consolidating. And I can understand that. Again, we're in a heavy volume area, so naturally, like I said, buyers and sellers battle it out. There's going to be a bit of, I would say my next area of interest would be up here, really. Still got a long way to go. That would be my area. If I was in a bullish position, I would like a long term, I would look at probably not necessarily getting out, but I would keep this area in mind as we approach it. But there's nothing too scary in terms of, there's nothing really that scary moving up. We are just in a heavy volume area right now. But if I move out to the side, look more on the shorter term, see if there's anything I could spot on the 15-minute. I'm going to switch on SVP. Cool. What do we have? Again, we're quite high up now, so there's nothing to the left of me for quite a while. I mean, we're looking back a long time again. So I would only be looking for bullish positions, obviously. I would only be looking to buy until we get all the way up to wherever that area was, which is still very far away. Till we get up to that yellow area there, I wouldn't be... I'd still be, my overall long-term sentiment would be to buy. So, and since we're kind of not creating new highs, but creating newer highs for a long time, basically, I would be, if we pull back into this kind of area, that'll be a nice little, if we get a little pullback there and then buy it again, that would be quite nice. Or maybe even right down, more extreme down to here. That'd be nice. Again, you can see, it did kind of do that. Well, you can actually see it between the two areas. It's already kind of done that. Went to this area, wicked all the way back down to here, and then continued up. And it did kind of wick back in and push up. So whether we will have a pullback, I think that opportunity's missed. Whether we will have another pullback, I doubt it. Then that opportunity is gone. But you never know. It might come back down again. But yeah, with the pound right now, I wouldn't see anything. There wouldn't be a trade for me right now. I would love to know what happened in these areas here, though. So I just want to go on the footprint for these areas. So I'm just going to highlight them so I can find it. Oh, I can just change it to footprint here, actually. Yeah, just do that. That'll be easier. Let's have a look. Yeah. Oh, were you still there, Howard?
Yeah, I'm back in the room. Yeah,
okay.
I shut my trading platform down. I went to reopen it, and it took me out. So I pressed. I'm good now.
Oh, that's good. That's good. No, I was just talking to myself then. I was wondering.
That's okay. I could hear. I could hear. No. I could hear I could hear every word.
Oh, that's all right then. That's all right. That's all good. Yeah. Like I was saying, I'm interested in the footprint to see if there was anything interesting earlier I can kind of base. I do like, I mean, you saw a trap happen earlier here on the pound. 470 and 604 contracts, all on that level there. And for the pound, looking at it, that's a lot of contracts for the pound. We generally rarely, like, we're hovering around kind of, anywhere near 100, 200, sometimes even as low as like 4 or 1 contract. So, oops, what have I done there? Control Z. So yeah, 400 and 600 contracts is a big number for the sterling. So,
that's all those sellers we were looking at on the on my one earlier on. I think that's these guys realizing they're on the wrong side. Yeah,
I think you're absolutely right. I'm trying to figure out the story, but I think you are right, absolutely. But yeah, that would really be. I mean, right this second, I wouldn't say there's anything. The opportunity was missed quite a while back. There was an opportunity to buy the market here back at only an hour and a half ago. It's not that long ago, to be fair, but that's long gone now in terms of the market's really moved. The next opportunity for a potential buy, I would say, is if we drop back down to this area, I would be interested in potentially buying it. It could break through that area and come back down to here again and then go up. That's a possibility. But those would be the areas. I doubt it will go lower than that. If it does, then this was just a false breakout, basically. But
not another one.
Yeah, I doubt it. I don't think there's. I mean, I can look at the footprint if there was any trapped people there. I can sometimes give you an indication if people. But no, the contracts are relatively low. I don't think 92, that's not really that big of a number. So I don't think, I don't think it's like people getting trapped in the market pushing against them to try and squeeze them out. So I think it's all right. But I would say, I mean, we're starting to get sellers coming in. So this could be another trap for the sellers, actually, which is always fun. Bit bigger numbers, 200. If we come back down to this area, 300, the sellers are coming in. So this might be potentially to buy the market. It's quite late in the day especially for the pound, but you never know. It's worth looking at. Let's look in the 5 minute if we can see anything a bit more clearer. Oh yeah, these are some big numbers coming in. Okay. Sometimes you can see it better as well if you switch it to a profile view rather than cluster view. You get to see. But what I find what TradingView does, annoyingly, it gives the same width to So basically, it'll be like bigger and smaller areas, right? But you can see like 57 has the same width as 537. So the whole profile view doesn't really add that much value, to be honest, because I would like to see like really, you know, like the most extremes have like really a lot of width, and then you won't even have to look at the numbers really. You could visually just spot it by eye. But maybe in an update, Trading View, if you're watching, please incorporate some new features into the footprint. That would be, I would appreciate that. But yeah, so we've had some potentially fresh selling. I don't think it would really be buyers exiting. I haven't seen that much. We saw a bit of big buying happening there. If I mean, it has to be a bit of bigger buying, but what I think is we're looking at like iceberg orders here. Institutions are really breaking up their orders into small, tiny, and just placing lots of them rather than placing larger ones in certain areas. So I would go as this could potentially be a trap. If we got a bit low into that area, that would have been a great place. Let's look at the normal candlesticks.
Yeah,
I'd be interested to see if it's...
Looks like quite a big number, 572. Yeah.
Yeah, 572 is actually quite a big number. So what I don't get is why the numbers are changing. 185. Sorry, let me just, because I never really look at the pound, but okay, yeah, I get it. No, that makes perfect sense. I'm being silly. Don't worry. Yeah, I mean, it's definitely. I would have liked a bit more of a pullback, to be honest.
Yeah.
It didn't really pull back much, did it? Kind of just wicked ever so slightly. If it pulled back into this area, that would have been quite a nice potential setup there, and then produced those numbers. That would have been really nice. But we're very bullish.
Yeah, no, we got Nico on the chat saying Eurodollar sell. How's your Eurodollar looking on the footprint? Euro currency, if you EC, I think it is EC.
Yeah. We'll go to futures. Euro. Here we go. Let's have a look. See. So I'm going to pop out again to the 4-hour chart. Get a bit of a, because again, it's something I'd never analyzed before, really. Had something from a long time ago there. So let me just clear that chart. I think last time I analyzed it was like last year. So let's have a look. And I'm going to draw a bit of volume in there. Yeah, we've broken out of. Okay, I would still be looking at potentially. It's more bullish than it is bearish, and I think anyone can see that. But there's nothing like above, like immediately above. The next area I would be interested in is all the way up here. So still quite a bit to go. In terms of retracements, again, this is 4 hours, so these will be longer pullbacks, but nothing I see here that would be too worrying either. Let's drop down to the 15-minute. And let's have a look. See what we see. Again, very similar to the pound, actually.
Yeah.
That would be the next area where I'd be interested.
Yeah.
Except it hasn't broken the high. The euro hasn't broken the high. The pound did. The high of the day on us S&P still. Let's look at the footprint real quick. Let's see. Again, I'll be interested to see what kind of contract sizes we're looking at. Okay, so the euro's got a bit bigger contracts in general. I'm seeing bigger numbers as a whole than the pound. So I'm trying to gauge what is like average, what is really big, you know? So I'm just kind of looking at overall the contracts and kind of getting a rough idea of what is like average and what is extreme. All right, so I'll say anything over like 600 is definitely more on the bigger side for the euro. So here we had a bit of people getting a bit trapped there, sellers. So I'll be surprised if it breaks below that. Definitely, 1,000 contracts on the buy side. Okay, so this is actually quite interesting now. Whenever, I mean, that is a lot of money on the line.
Yeah.
And someone bought right at the tip, there could be a sell opportunity, but I don't want to say short the market. Definitely don't, not yet. Just because it's been so bearish, I mean, so bearish, so bullish, I would be nervous, shorting a market like this. But and there's no area. Actually, 1 minute. Let me jump onto the 1 hour. I might be able to find a more concise area of what we're looking at. No, it's got to be 4 hour. It's too far back. Sorry, I'm like scrolling like crazy right now. 1 moment. I think another way I can look at it to identify more of a smaller area as to why potential stop there. I just want the volume from here to here. Oops, that's not the volume tool. Sorry, here to here. Aha. Okay, there's a clear gap there. But that was okay. All right, now jump back to the 15-minute. I got that drawn up. Okay. Okay, we're literally just breaking above that area. Okay, yeah, so having 1,000 contracts up right at the tip would be very nerve-wracking. If I was in a bullish position, I'll definitely be looking to get out, because that to any institution would scream, I'm a vulnerable target right now.
Yeah.
That's almost, you're putting yourself in plain view that.
Yeah, you're slightly offside. You've got a big position. You're slightly offside, and it could, if push comes to shove, it could go.
Exactly. I wonder if I'm going down to the minute. Oh, it would have been like an individual or quite a
705.
one entity maybe, because it's on the 1 minute you've got 705. So it's not like, it's definitely one. I mean, they might be taken advantage of, and you might see the market push back to squeeze them out. But I wouldn't want to short it at the same time, just because it's not an area. I mean, we are at an area where there could be a bit of a reversal, but it wasn't the most obvious area. It's quite late in the day. There's loads of things against shorting it or even getting in at all in the market. Yeah. But that I would be worried. As if I was them, I would be a little bit worried. I would not want to be in that position right now.
I guess it depends on whether they're kind of longer term, bigger players, and they're thinking, well, this is into FOMC. There's going to be maybe a move tomorrow kind of thing.
Yeah, could very well be. Or maybe they were looking at the pound as well. Saw the pound broke the highs. Yeah. And although the euro hasn't, they're now thinking, oh well, if the pound has, they're generally they mimic quite each other. Yeah, I mean, who knows what exactly they were thinking, what strategy they're using, but someone's put a lot of money on the table right there, and it doesn't surprise me that the market's reversing. I think they're gonna get squeezed out. It depends. Again, you don't know where their stops are. Their stops could be, like you said, it could be long swing traders, right? Their stops could be a few days away. You just don't know. Unlikely, but it could be. There might not be scalpers. There might not be day traders. But we'll see. Yeah. But I still hold my original bias that we're going to be bullish more. Yeah. The area I would look at would be if we dipped into that. Let me just color it a different color so it makes it a bit clearer. Let's make it green. Why not? Green's a nice color. Yeah, dip into that green, light green area. There could be a potential to buy it again. If not, a really nice area for potentially buying would be all the way down here, if it makes it. But those would be my two areas for a pullback that I would like to see it get to before I consider buying. As for those people trapped, I mean, I haven't exited the market. They seem to be quite holding on. So maybe, yeah, it's more longer term for them. They're not that worried, because that is a very silly place just to place such a large order that close to a high as well. Doesn't really make sense to me. Unless it was people getting stopped out, unless there was a stop. It could be that. It could be sellers from back down here getting stopped out. But that usually would be above, a little bit above, not unless it's a break-even stop. But I don't see anyone previously earlier in the morning getting in at that kind of volume. What about previous days? And we haven't really been that high, so it could only be from earlier today. Maybe on the 5 minute you might be able to see it. I'm trying to figure out what exactly that is. Is that someone buying, or is that just someone getting stopped out? Because it is a very odd place to...
Yeah, I'd imagine it'd be people kind of anticipating the break, as you say, because sterling went through the high, so maybe they're thinking, right, well, they're all going to go. They're all going to go.
Yeah, I think you're right. I think that's what it is, because I'm not seeing, and I think anyone who did short the market there, at least from a day trader's perspective, they probably would have taken profit a while back, especially since we dipped below these lows, right? I don't think anyone's going to be, if you shorted the market up here somewhere, it's unlikely you're going to allow it to go all the way back to break even and get stopped out. I don't know. I mean, it can do. Some people might have lifted off half their position, 3/4, who knows? But that's a huge amount of contracts, and it doesn't add up on the footprint either. So I am thinking that is people anticipating a breakout, getting in a bit too early, maybe. It might play out for them, but they've definitely made themselves visible. And if you're visible in the market like that, expect some people to try and take advantage of you. Yeah, so it should be interesting, but I still think they'll be right. I think it's still going to be bullish for a while.
Yeah. Okay. I'm going to try and call up my trading platform again, and hopefully this time I won't be kicked out. So just in case I do, let me just let's see.
I'll just stop sharing my screen.
So what I'm doing is I'm trying to add a new window, which should give me the platform. But last time it kicked me out, so just in case, right? I may disappear very quickly, but it's nothing personal.
No worries.
All right, here. Okay. Well, that looks good. I think we're okay. It may have just been a technical glitch before, so
yeah.
Okay. Okay. Just coming through now. Okay. Actually, one thing I wanted to show. I don't look at these that often, but sometimes they give you a good pattern. Dollar Mexican peso.
Okay. Very exotic.
A bit exotic, but somebody asked me for it the other day, and it's a really, really clear Elliott wave setup on it. So let me just put it in there. So 1 second, share screen. And okay. Okay, can you see that?
Yep, you're up.
Cool. Okay. Yeah. So basically, what we got this one, it usually goes up because the peso is devaluing, but we've had some peso strength against the dollar going back to 2020 for the COVID situation, and that was a kind of climactic run up. So Elliott wise, what you tend to get, it's all very much pattern based. Very often you get a triangle in a fourth wave position, which is the last consolidation before the last push up within a trend. So back here you had a kind of a big run higher, which was a third wave, which is usually the longest and strongest part of a trend, the middle bit of a trend. Then you had the consolidation, which was an Elliott wave triangle, a wave 4. Then you get that kind of climactic push up in wave 5, and that ends the whole sequence. So once you get 5 waves are complete, then you're looking for an ABC pullback, which corrects the 5 waves. Okay, now this is a long-term chart. This is like going back to mid-late 2009 there. So we've had this kind of 3-legged decline, A, B, and C, from the major peak, and then after the 3-legged decline, the first leg up, I think, of the new up cycle. And that's really what we're looking for when we're analyzing these waves. We're looking for particular patterns. So typically triangles will form in the 4th wave, or sometimes within the B wave of an ABC sequence. So you have this kind of A, B, and C down, and then the first leg up of what I think is a resumption of the major bull market, which should take it to new all-time highs. So it looks to me like we're seeing, in line with dollar strength against dollar weakness against most other things, we're starting to see a little bit of dollar weakness against the Mexican peso. But I think this time it will be very limited. It will be kind of maybe like a 50% retracement or something. We've got a big area of support coming in around here. So that's just something I thought I'd throw into the mix, because sometimes it's good to look at these more exotic markets just to sort of prove the concept of what you're doing.
Yeah.
And so sometimes it can actually help you, because you look at a wave pattern or a setup, a candlestick setup in one market, and sometimes it can make you think, about a different but related market. Sometimes it can really help you with the bigger picture. I mean, I know one thing. I've got particularly bullish on the commodity currencies lately. Dollar Canada, Aussie dollar. They have been not really following the dollar lower. Only the last couple of days we started to see it kind of break down again. This is dollar Canada. So a lot of this was linked to the stock market decline, because the stock market fell out of bed from, I think, the 18th on, was it the 19th of February? The all-time high was around, and that's and that saw a sell-off in the so-called commodity currencies like the Canadian, the Aussie, and the Kiwi is actually linked to the Aussie, I guess, through its trading relationships. So now that we've had a bit of a pullback today, but it's not making new lows, I don't think, for the whole trend at the moment. So we've seen a little bit of a kind of a sell-off in the commodity-related currencies. So it's interesting how action in one market can really help you with your kind of outlook and your trading strategy for another market. I find. Do you find that as well? Are you looking at different indices to get your S&P view or to help you?
I mean, I don't anymore, but I used to. I used to like to analyze it on all different instruments, so to speak, until I found one that just kind of. I don't know. I don't even know why I really picked the S&P 500. I think it's just the most popular. Yeah. Just went with the crowd, really, essentially. Yeah. But
it's not as crazy as the NASDAQ.
No, I mean it has more volume, believe it or not, in terms of contracts bought and sold. I think especially in the futures, the S&P 500 is kind of the golden child. Robert's back. You go. Sam is back. Robert, how are you doing? I was a bit sad that I didn't see you earlier in the chat, and now you're here. So, Robert, it's always great to have you here. You haven't missed that much analysis. It's another boring day. We did have a perfect trade opportunity that sadly was not taken, but so be it. But Howard got into just before the session, got into a very nice trade. I believe you're still currently in. You've taken half your profit, right? Perfect.
So yeah, taking some back on sterling dollar cable. Still got the whole position on euro dollar, holding it until the close or till the end of the day, really. So just looking for whether we can see an extension of this short squeeze or basically resumption of the trend. Interesting how it trapped people on the upside in the morning and trapped people on the downside later on in the day, and that has seen the late rally. So that's an interesting thing to if you're looking to if you're looking for one particular idea for trading, as you say, looking for those traps can really help you.
Yeah, no, absolutely. Always look, where are people, I guess, trapped, or where are people nervous? Where's a lot of money on the line? That's the generally you find the answer, and you can do that just with price action, to be fair. Obvious places where stops are going to be, things like that.
Yeah. Do you look at indicators much yourself? I'm not a big indicator person myself.
No.
Yeah.
Sadly, I've never. I mean, I used to back in the days use like EMAs, like just moving averages, things like that. But I found they for what I'm trading, it almost not confused me, but conflicted a lot of the time, because I have no bias in terms of trading up or down. I would trade it either way if the opportunity presents itself. But if I'm using, like, I don't know, a moving average and price is above or below that moving average, it'll make me more hesitant to enter a counter trend trade, so to speak. So I like to just the only indicator is literally the volume profile, and I mean it's technically an indicator, but it's not lagging. It's literally based on the volume. So, but yeah, indicators as a whole. I mean, some of them can be useful. I mean, I could definitely see how stuff like the RSI and stochastics can be good in the ranging market if it's a clear range. Yeah, absolutely. I mean, stochastics, RSI, those oscillators, they can work really well in ranging markets. But again, like with any tool, you got to use it in context, right? Yeah. You can't just use it at any random time. There has to be thought process behind using that tool in order to make it the most effective.
It's funny with oscillators. When the market's trending, you just chuck them out the window, really, because they're the market's oversold, but it just gets more oversold, kind of thing. Yeah. But as you say, when it's in a range, then you're picking the highs and the lows. It's brilliant.
Oh yeah, it's fantastic. I mean, if you just take like the stochastics on the ranging market, you're like, oh, it can predict the future perfectly. And I think that gets a lot of beginners as well, because they'll see it in like a ranging market and be like, oh my God, this is the greatest thing ever created. And then they try and use it in a trending market and get absolutely annihilated.
Oh God, yeah. I think there is. I remember reading a book some time ago, and I think you're looking at the charts, it bears it out. If you're going to use the RSI, for example, if it is a trending market, it won't go down as far as the oversold level. So typically, it go down to say 40 rather than 30. So you're looking for the RSI in a bull market to base between say 40 and 50. And a lot of the corrective pullbacks tend to do that. So I think that if you think, okay, this is the regime for the market is a clear uptrend or downtrend, and you're going to use oscillators, then just raise the levels, because you're not going to get the market to become oversold as you normally would in a range. So it's interesting.
Yeah. But again, I mean, stuff like that, you can easily overcome it by just understanding market structure as a whole, being able to identify a ranging market. And I know that sounds quite easy. Oh, well, if it's going sideways, it's going to be ranging, right? Or but a ranging market that works really well with like oscillators and stuff, you kind of really want to see that picture perfect ranging market, where it really just goes up, down, up, down, up, down. It's kind of like really trapped in a perfect rectangle, Yeah. If you find that kind of pattern happening, oscillators work amazing.
Yeah, the thing is, you don't see the classic textbook example that often, though, do you? It's
no.
Same with the trend lines,
Yeah, I mean, that's it. Why do you think that is, though? Because I have this theory that as AI and algorithms are becoming more and more used in the markets, especially by the bigger players, I have this idea that traditional technical analysis in terms of like patterns and trying to it's going to become less and less, not effective, but more kind of noisy. It's not going to look as perfect anymore, because I feel that the more participants, the more, you know, trades essentially being taken, the more noise is going to be in the market. I don't know. I mean, that was like a theory I have in my head as to why. Because when I started trading, I could have sworn the markets were more structured. I feel like they're a bit more chaotic. I don't know if that's just in my mind, but that's the way it feels for me. I don't know. I mean, you've been in the game way longer than me, so maybe, you know.
Yeah, I don't know. I think it's if you're looking for classic examples, then you're more often than not, you won't, they won't be there. You're looking for a trend line retest. By the time you've decided that's it, that's where the trend line is, that's where the base is, that's when the market trend changes. So I think you just got to be ready for, okay, I'm looking for a base around the trend line or the moving average or something, but look for some clear evidence on the intraday charts or whatever it be, on the smaller time frames or the volumes or footprints or whatever it is you're using, because without that, don't expect the market to suddenly stop where the line is.
Yeah. Robert says, I feel like it will end up more. I'm assuming I will end up more swing trading for manual trading in the future. I think that's what most traders say, right? They start off as day traders, scalpers, who knows, and then as they get older, they just swing trade. And I think that's the natural evolution as well.
I think I think if the more focused you are on the markets and looking at every single tick and very short term intraday, you're kind of chained to the screen a little bit. Whereas if you're maybe a 1 or 2 or 3 day swing trader or even beyond, then you don't have to be quite as attached to looking at every single move. So I guess it just suits your personality or even the time you've got or you want to spend doing it. But obviously you can make a lot more by trading every swing, by spending the time and the effort and all the rest of it. But I guess it's horses for courses.
Yeah, no, absolutely. And I think when you're young and hungry, you naturally go more to the day trading side of it because you want to participate. You want to make money like on a daily basis. Swing trading is, I can understand the appeal. I really do, but I don't think I'll be satisfied right now with swing trading. Do you know what I mean? Like, I don't think I could genuinely be like, it wouldn't satisfy me yet. It's just too slow for me. Getting in a trade once a week, maybe.
Yeah, for me, I like to maybe trade once or twice a day, but I'm not looking for the in and out stuff. I'm looking really for, okay, if I'm looking essentially for the trend of the day. So that, for example, this upside breakout after a trap on the downside, I'm looking to get in and then just get out at targets and hold it until the end of the day. Or if it's a beyond the day trade, then I'll get out by the end of next day kind of thing. And I suppose that's really my kind of time frame. So I'm just waiting for a particular setup in the direction of my overall bias.
Yeah, no, I agree. Robert says, well, because of AI will stop most people out. AI might become so good it will just wipe out the retail trader. Who knows? I doubt it will. I think actually, in a weird way, I think it will open up more opportunity in trading. Not saying that we'll have access as retail traders to the best AI bots out there. Highly doubt that. But I think it will give us more opportunity in terms of potentially just more activity, more volume. It might be more chaos, but it could be more opportunity. I don't know. It's hard to say. It's really hard to say.
Yeah, I guess it can alert you to things much quicker than you can do it yourself. If you're looking at a range of different markets or opportunities, it can suddenly flash up something that it might take you a while to get.
Yeah, absolutely. I think AI can definitely help. I hate to use the word automate, but can help definitely assist you in your trades.
Yeah.
It goes, I don't like swing trading. I'm terrible at that. Oh, me too. The worst part about swing trading was for me, I couldn't sleep. I'd be in a trade And I'll be risking like 1 or 2%. So I'll be perfectly, you know, within decent risk management kind of parameters, so to speak. But I wouldn't be able to sleep. I don't know why. My dreams would be dominated about that trade I'm currently in.
Yeah, I know what you mean.
I know I'll get the worst night's sleep, and I'd wake up and
yeah, you're imagining all the worst case scenarios that would affect your position.
yeah, exactly. And I just that never went away. I mean, I'm sure at one point it would have, but it just never went away for me. So yeah, for me, swing trading just wasn't the right bit. Yeah. Some people are really good at it, but I like to get out of a trade nice and quickly. I don't like to be in it because I can't leave the computer as well when I'm in the trade.
Yeah,
you know, I find it amazing that some people can just step up, walk away, do other stuff whilst in an active trade. Like I have to stare at it every second.
Yeah, kind of mind over markets, you know.
Yeah.
I can make this move. I must admit, I usually try and walk around the block, or take the dog for a walk or something like that. And okay, the stop's in place. I'm not going to look at it, you know, come back and do it, you know, and reevaluate if there's any reevaluation to do.
I've tried that, but then I just end up going to my phone and looking at it every day.
Yeah, oh, that's the trouble.
Yeah, it never worked for me. That's why now I just take one, at most 2 trades a day in that kind of time period. If I miss it, I miss it. If I catch it, I catch it, and that is it. Like, make my money.
It's good. Yeah, and it's good to have to know when you've got downtime as well, isn't it?
Yeah, it's very scheduled now, you know, which I kind of like. Robert says, yeah, same. I want to be in it all the time. Yeah, I mean, over trading is a problem as well. Like, I used to love to be in the market constantly as well. Try trade every opportunity, but believe me, in the long run, you actually don't make as much money. Even if you're profitable at that stage, you still won't make as much as if you just stop at one trade. Just wait for a really good trade. It usually happens around the same kind of 3-4 hour time slot. You know, you set your alerts so you know exactly when it comes, and just enter, get out. And as long as you stay disciplined like that, even if you have a losing trade, just walk away. It's not a big deal. You actually end up more profitable. At least for me, I ended up more profitable by trading less than by trading more, which at first doesn't make sense, but it really is it. Sorry, I'll just drop my pen. Grab it. Where it is. Oh. And I don't know where it's gone. It's just magically. Oh, it's all the way over there. Just rolled away. There we go.
Yeah, but as you say, less is more. Less is more.
Yeah.
If you know what you're looking for and you know the probabilities are high when you get it, then it's just waiting for it to come along and going for it.
Yeah. Robert then says, I started to write a Forex bot for swing trading so I don't have to. Bots, yeah, I think if you're going to write a bot, swing trading would be the kind of bot you want to have, I think. More longer term. Cancels out a lot of the noise. I think like scalping bots and stuff. I've never seen like a scalping bot be good. Then again, I haven't tried that many, but I've never, I don't know, scalping and bot trading.
Yeah,
there's too many variables.
I'd imagine the cost of trading would, if they're really high frequency, I imagine all the commissions and everything and slippage and all the rest of it would kind of eat into it.
Oh, absolutely. Yeah, absolutely. 100%. So yeah, if you're going to do bot trading, I'll definitely say swing trading would be more the realm you want to be looking at. Because you have room then to brief, like your bot doesn't have to be that. I mean, it just kind of has to figure out the long-term direction, so to speak, and getting stopped out would be more. I mean, it will happen, but it wouldn't be like due to so much like manipulation or someone like stop hunting you. It kind of like, you know, it averages out a bit more. You've got a lot more room and breathing room, and you don't have to worry about the noise as much. Even stuff like news coming out, like if you're a proper swing trader, you can generally absorb news coming out without too much of a worry, unless you've just entered right before the news. Obviously, that's different.
Yeah, it's good to if you're writing a bot, then it's good to kind of like put in a filter and say do not trade at you know at the normal time that economic releases get come out.
Oh yeah.
Or just switch it off on non-farm payroll day or FOMC or something.
Yeah, definitely avoid a news filter would be 100% needed for any bot. Or just manually switch it off, I guess, like Howard said. Yeah. I'll get back to doing that in a few months. Yeah, I'll dream about the trade I'm in or the trade I'm waiting for. Yeah. The trading dreams, they were the worst. I'm glad I don't dream about trading anymore. I tried to write it to scalp, but it ended up swing trading. Okay.
Yeah.
Well, that's probably a blessing in disguise then. Yeah, I got to the point that it was over, all profitable, but I wanted to also look at multiple time frames to scalp. Yeah, no, absolutely. I mean, I don't know about bots. Bots, I'm kind of on the fence about. I think we do have the technology. I think the technology out there exists to write a profitable bot, consistently profitable bot. I do think it exists. I don't know. I think if it does exist, it's not available for sale for the average retail trader. Because truth be told, if I developed a bot that was consistently profitable, made me X amount of percent a month or whatever consistently, I wouldn't sell it. Why would I sell it? I wouldn't need to sell it. Like, just trade your own capital if it's that good. It doesn't make any sense to sell it. You would trade it for your own, your own account. You get a few prop firms, whatever. Do you know what I mean? You can find a capital quite easily if you are consistently profitable. Like selling it's just a hassle. You'd have to build a website, all the marketing material, blah 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 blah. Why would you go through all that just to sell a bot? It doesn't really add up. So I don't think there is anything available for the retail market, so to speak. But 100 million%, big institutions, a lot of it's algorithmic, and I mean they've got they're not running on home computers. Do you know what I mean? They're running on server rooms that are the size of maybe not a warehouse, but like huge. They've got next level processing power that can analyze every tiny bit of data available, and it processes it like nothing a home computer can do. And it's just a whole nother level. Millions and millions of pounds of infrastructure to get to run those kind of algorithms, and they've got constantly an army of people, the biggest eggheads in the industry, constantly maintaining and maintaining the software or the bot, if you want to call it that, or the algorithm. Like it's an ongoing process. It's just a whole nother level.
I think the concept of kind of rule based is probably not too bad, because you can find out what works and what doesn't work. I think that's definitely what on the plus side when it comes to so-called bots or EAs or systems or whatever you want to call them. The fact that you can actually prove a concept or disprove a concept, I think that's quite good.
Yeah, no, absolutely. Robert goes, you shouldn't sell it because then the institutional bots will adjust for it the more the AI sees it. Well, absolutely. I mean, even if you do build a profitable bot, it might be profitable for a year or two until things change, so to speak. I mean, the market does change over time. So I think even if you do get down that bot route and you start, building bots or buying bots or whatever, there has to be that ongoing maintenance. I think you have to be the one who created it. It's got to be your kind of algorithm, so to speak, if you want to actually successfully trade it. I think if it's just something you're buying online.
There's a lot of charlatans out there trying to sell snake oil.
Oh, literally. Yeah. Let's have a look at the chart. I haven't had a look. So what were we looking at on the euro, right?
Yeah.
Did it ever come back down to that area?
So we're a little bit lower, fractionally lower. It's kind of stalled.
Yeah.
Not selling off aggressively.
Let me pop up my screen.
Same with the pound as well. It's Yeah, go for it.
So, yeah, those people are still trapped. That 1,000 contracts on the euro, they're still trapped. It's just going sideways for them. So I'm sure they're not that worried, but they haven't got out either. But like I said, like I'm not surprised the market just stopped there. I mean, someone's placing 1,000 contracts essentially. There's got to be, yeah, it's dangerous. It's dangerous.
Or what do they know that we don't know?
That could be it. You know, that could be it. Absolutely. I mean, if you're looking at candlesticks, yeah, I would expect a push down to that area before it goes back. I mean, if that is the only retracement it's had, that would be quite impressive. That'd be very impressive. But yeah, I'm guessing those people are probably hoping it pushes up. But again, we don't know where their losses are. Their stop losses are. It could be far away. It could be a long-term position because it is a very odd place to randomly buy, especially before the high.
Yeah,
I think they were just anticipating the breakout from the. Let's check the pound again. So the pound hasn't pulled back completely either. Almost. We'll go a few price levels away.
just holding, isn't it? Just
yeah, there wasn't. Let me check on candles. Yeah, that was about as far as it pulled back. Got very close to that area. Again, I would have loved to see it drop to that area for a push up again. But it just didn't do it. And it's only ever slightly broke. I mean, some people would consider not even a proper break, to be honest. Because it never really closed above, did it? No, I mean, it only wicked above the high. So I guess some people would say that's not a break. I wouldn't really call that a proper break either, to be honest.
Yeah.
I would like to see it close on a higher time frame above that before you can really consider it a proper break. But everyone, you know, each their own. Everyone has a different way of viewing that. Let's have a look. Yeah, it's just kind of moved sideways. And again, that kind of makes sense, especially for the pound and euro. I mean, around this time, they kind of die off, right?
Yeah.
You're really looking at the London-New York crossover for these bad boys to pick up. Let's have a look at the ES again, the E-mini, the good old S&P. The ES. Let's see what's crack-a-lacking with that. Actually, I can switch that back to the candles because I've got the ES at the top. Again, yeah, sideways. For Robert, if he is still watching, I know he loves the footprint, so I'll show him the perfect trade that was missed earlier today. The perfect trade. Sadly, I was way too busy today with other stuff, so I didn't trade. But as market opened, we've got this beautiful trap. 1,000 contracts here, 1,000 again here, 2.6, 2,600 contracts bought right there. And then beautifully, as it pushed away, you could see them getting out the market, taking their losses. And then you just see heavy selling come in. The moment these people get out, the heavy selling is coming in strong. And the market just pushes down with such ease until it eventually comes to a stop at the point of control from yesterday, the highest traded volume area yesterday. So it was such a clear trade down. I mean, that candle is
big,
scary. Yeah, it's very big. Doesn't look that big on the footprint, but wow, on a candlestick chart, you can really see how big it is. I mean, on a footprint, it doesn't look that scary. I mean, this is the 5 minute. I was looking at the 50-minute before, but if I go to the 50-minute, it still doesn't look that scary on a footprint. But it's the only downside to the footprint. The candles look deceivingly small. Like that move just doesn't look that scary on the footprint, push down.
Yeah.
But then when you look at it as a candle, you're like, whoa, that's
Quick, sell everything.
yeah. So it's always good to have a candlestick chart as well, just because the footprint will deceive you. You'll be like,
Yeah.
oh, this is minor, it's only moving a little bit, and then you look in the candles and you're like, what the hell's just happened?
Yeah, you see all the you see the green ones in there, thinking, oh, that's okay. There's a few green ones in there. That's okay.
Literally, yeah. So always good to kind of get perspective. Oh no, sorry, that wasn't the move. Oh, I'm looking at the wrong one.
Oh, that's
why.
That's
There it
the
is.
one.
But even then, it still doesn't look that. I mean, it looks big, but it just doesn't have the same. I don't know. I feel the candles always look bigger. But yeah, now we just went sideways. So we had a really good trade opportunity at the open. Sadly, that opportunity has gone. I do think sellers are still in the market. So I'm not expecting a push up until those sellers get the hell out of the market, which I haven't really seen. Again, pretty low numbers as a whole. Those sellers are just holding on to their positions. I'm not seeing any big numbers on the buy side really that would indicate they're getting out. I think a lot of them have taken profit naturally. You know, you're looking at 600 here, 500. There's definitely some people taking profit down these lows. We had some people take profit earlier at bigger numbers, 700 here as it started pushing up. They obviously got sellers just got out. Thought it could be a reversal, not a reversal, but a pullback. But there's still a lot of, from my calculations, there's still quite a bit of volume from the sell side in the market. So yeah, we're not, I don't know. I mean, it's pretty much near the end now anyway. So that's the thing about the third session, right?
Yeah.
It's
it's
be a bit boring.
Yeah, last knockings kind of thing.
Yeah. Watching work is on pause now. Lol, still worked. Okay, good. I'm glad you saw. But yeah, I just wanted to showcase that because it was clear as day. Clear as day, the trap setup that I always speak about. And every time I'm on these live streams and I'm trying to show it, it's never given me a really clear example. But today, I mean, you have an example that is just clear as day, right? The moment the market opens, you got these buyers, you know, putting big bets. Obviously, the market's been pushing up the last couple of days. So some people were thinking, you know, we're probably looking at, you know, quite a push up, putting a lot of money on the line. And then as it immediately goes against them, you can see them getting out the market right there, releasing any buy pressure that was in the market. And the moment it drops below, look at these sellers right here. These sellers, like 2,000 contracts, just smashing it in. I mean, you could have gone in so aggressively on this trade because it lined up so beautifully. You could have gotten so aggressively and just boom, 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 sold the market down. And it would have smashed pretty much most take profit levels. Like here would have been an obvious one, obviously, these lows from yesterday. Smashed that. If you're targeting, you know, the point of control from yesterday as well, smashed that, no problem. So you had a lot of good areas to target. A lot of good areas to target where it did it easily literally less than 15 minutes. I mean, that was already a bit into the candle. So maybe 15, 20 minutes at most. Bang. Zero drawdown. It would have been beautiful trade. Exactly the ideal setup that I look for. And probably a textbook example we saw earlier today. So again, won't always look like that, but that is ultimate place. Watch them get out the market. Sell pressure comes in. You know, you could enter one position here, 1 quarter. As soon as you saw that, I mean, I would have piled on the last of my 3 positions on that area right there. As soon as I saw that 2,000 coming out, I'm like, ooh, pile it all on. Put all the contracts on there. You know, you're not going to get a better confidence than that. I mean, if you're still waiting as it's going down, you've missed a move. Like, you're not getting a better, clearer example. So if you're not already at full risk, like exposure already, like your full amount that you're willing to risk, obviously like 1 or 2% or whatever, at that point, yeah, but never risk more than obviously a few percent. Be realistic, because it's still, I mean, although it's a very nice clear example, it's not guaranteed.
No.
If it's not guaranteed, better not risk it all. But that was it.
Yeah.
I hope.
Yeah.
Please, Howard. Yeah.
Yeah, I was just saying on my side, on the currencies, very sort of narrow ranges today. No real follow through on the attempt higher in the euro and the pound or all the other things. So I think small ranges lead to large ranges. So could be a good opportunity to have another go at the trend tomorrow on my side. On the I'm looking for tomorrow, looking for dollar downside over the session. So could be an interesting day for a breakout tomorrow.
Absolutely.
At least going into the FOMC anyway. So never trading over it. Yeah.
Yeah, I mean, tomorrow would be interesting. Honestly, I don't know what to expect. FOMC is always a bit like the whole FOMC week. I'm talking before the actual release, obviously. It's always it's a bit of a rubbish. So I'm amazed we saw such a beautiful setup today. It'll be more like yesterday, where it was just there was no decision really. No one really committing to a trade, so to speak. But today, I mean, hey, look, you just never know. Even with FOMC coming out tomorrow, some people are willing to put a lot of money on the line. So anything can happen. But tomorrow, generally before FOMC, you're going to have a quiet kind of. You're going to see similar to what we saw yesterday. Just no one really putting any real volume in the market. But hey, I could come tomorrow and it would be the most craziest day ever. You just never know. The markets, they can surprise you sometimes. So it's still worth having a look. Absolutely. Still worth having a look tomorrow. But generally speaking, if there's going to be a day you take off, you can take off FOMC statements. Like have a day off. If you have to choose a day where you want to take a day off or a week take off, I'll say take off FOMC.
Yeah. But particularly if they come up with something really really random. Yeah.
And it's all a bit cloudy. It's not like a release like NFP where, it's either good or bad, essentially, right? FOMC can be, and Jerome Powell, he doesn't always speak the most clearest in terms, like, you have to pick up on a lot of subtle hints. And some institutions will pick it up, others won't. And you get really kind of choppiness during the actual, statement itself. Like you get this, sometimes you get this really kind of, a lot of like movement, but it doesn't actually go anywhere, like a ranging market, but really like nasty range. And you don't want to be stuck in anything like that, especially if you're a, day trader or scalper. You don't want to be stuck in that. You're going to be like really happy and then really sad and then really happy and then really sad.
Just close everything long before it comes out. But I think if you're doing stuff over your time frame, you can probably be in and out, long before if there's something at the open. If you're looking for that kind of trade, but obviously getting out long before. Yeah,
absolutely. I mean, it just depends if other people see it the same way, Howard. If other people are not trading, I'm not going to trade as well. I only piggyback on other people's volume, essentially. That's all I'm doing. So if other people aren't there, then I might want to trade on Christmas Day, but realistically, it's not going to happen. But guys, we've got about 2 minutes.
So that could really spoil your Christmas Day, couldn't it? Merry Christmas. No, it's not.
I remember when I was quite new to the market, to trading as a whole. There was one day, like normal, I got up, analyzed the charts, and I was sitting there for hours. And I was like, nothing's happening. Like the market was just really dead, and I noticed the spreads were a bit bigger. But I just thought, why is my broker, putting the spreads up?
Yeah.
Turns out it was Good Friday, and I just sat throughout the whole day when every market is like,
yeah, it's nothing's happening. What's going on?
yeah. But beginner mistakes. You do these kind of things, right?
Oh yeah, yeah.
That's why you got to check the calendar at least every day, or before on the week as well. Like on Sunday, have a good look at the upcoming week.
Any holidays? What's coming out?
Yeah. But we've got less than a minute, so we're going to say our goodbyes. Howard, it's always a pleasure.
Absolutely.
I hope the trade pretty much, I'm assuming it'll be over soon, right? You're going to be getting out soon. It's looking good anyway,
I should be having another crack at it tomorrow. So depending on if we get the decent pullback. So
perfect. Awesome. Robert, thank you for joining again. You're always you're keeping the comment section alive on these live streams. So all the love. See you tomorrow if you're in the morning session. I'm not. I'm on the third session tomorrow. Howard, I don't know what session you're in.
Yeah, I believe 3 as well.
3. Okay. Well, I'll see you tomorrow, Howard, as well. Perfect.
Yeah, looking forward to it.
Awesome. Thank you everyone for watching. We'll catch you soon.
Have a good one.
Take care, guys.
Bye.
Bye.